All right, we'll call this meeting to order. If I could get everyone's attention. We'll call the meeting to order. Brian, are you or Karen? Which one's taking roll?
I'll take the roll, sir.
Go ahead, Karen, please start with the roll.
For the Select Committee for Capital Financing and Investments, June 19th, Senator Driscoll,
Excused?
Senator Furphy. Here. Senator Guru.
Here.
Senator Hicks. Here. Senator Steinmetz. Here. Representative Harshman.
Here.
Representative Knapp. Representative Larson.
Here.
Representative Storr.
Excused?
Representative Obermueller.
Here.
Vice Chairman Nethercott.
Excused?
Chairman Walters.
Here.
You have a quorum.
Very good. Folks, we'll try and get through our agenda expeditiously today. It looks like a good, robust agenda. We should have some exciting discussions. And with that, we'll kick it right over to Catherine and get started with our local government funds and investments and equities.
Yep.
Or is that you, Brian?
Yeah, Mr. Chairman, I'll just give a brief introduction before I turn it over to my good colleague. So, Mr. Chairman, members of the committee, you should have in your materials 2021 House Joint Resolution 9. This is 2-01 in the meeting materials. And then 2024 Senate File 90, which is 2-02. So in 2021, the legislature, and Mr. Chairman, this topic concerns the investment of local government funds in stocks and equities. In 2021, the legislature adopted House Joint Resolution 9, which was adopted by the people of Wyoming at the 2022 election. And there was an amendment to Article 16, Section 6A2, adding a new subparagraph C. And this new subparagraph specifies that the legislature may provide by law for the investment of county, city, township, town, school district, or any other political subdivision's funds in stocks and equities. The legislature is authorized to designate which of these funds may be invested. The legislature may prescribe different investment conditions for each type and class of political subdivision and for each type of fund. Any legislation that establishes or increases the percentage of any fund that may be invested in stocks and equities requires a 2/3 vote of the legislature to be adopted. So in this past session in 2024, the legislature adopted, and this was enacted into law, Senate File 90, State Managed Local Government and Equity Investment Pool. This act establishes an investment pool for local governments, all of those that are specified in Article 16, Section 6A2C, to invest funds in stocks and equities. It would be a third local government investment pool with more long-term redemption options and require additional penalties for early withdrawals. The act requires the state treasurer to adopt rules for transmitting funds for investment, the manner of withdrawals, including any limitations that may be imposed on withdrawals, accounting and reporting procedures, a minimum fund size for the investment of the funds on a pooled basis, and any fees to be charged if the treasurer deems that necessary. Before a local government requests a treasurer to invest funds in this third investment pool, the local government must acknowledge in writing an understanding that investing in equities involves risk of loss of some or all of the invested amount. And then Senate File 90 also provided that nothing is to be construed to require the state to reimburse local governments for any losses that may occur on investments in this third investment pool. Mr. Chairman, that's a brief overview of kind of the legal landscape, at least in terms of state law. And before I turn it to my colleague, I'd be happy to answer any questions.
Committee, any questions for Staff Member Fuller after that description? Okay, seeing none. Catherine?
Good morning, members of the committee. Catherine Camerati, Budget Fiscal. I am here to present on local government investment and equities, and this should be in your meeting materials. The memorandum is item 203. This topic relates to the committee's priority number 1, which states that the committee will study alternatives and options for the investment of local government funds in equities in addition to a state-managed investment pool. Essentially, this memorandum states that currently local governments, upon request to the state treasurer, can have their funds invested by the state treasurer in equities. The legislature, by statute, has the ability to further prescribe by law how local governments can invest in equities. The general trend is that most states do not expressly authorize investment in equities, and upon review by LSO, only 3 states that we found, Colorado, Kentucky, and Minnesota, authorize local government investment in equities subject to certain requirements or restrictions. The largest public finance officer association in the US, the Government Finance Officers Associations, best practices imply that local governments should not be investing in equities because equities have a higher risk profile, and due to the fiduciary responsibility that pertains to investing taxpayer funds, these funds should not be invested when there's a risk of loss. Lastly, this memo offers some considerations of next steps for the committee to contemplate. I don't want to go over what Brian just went over, but I would like, which is the first 2 pages of the memorandum, but I would like to highlight a little context for the House Joint Resolution. During the introduction in 2021 of House Joint Resolution 9, or the amendment to Article 16, Section 6, the sponsor stated that the resolution sought to provide an option for cities, towns, and counties to invest monies held in perpetuity into equities and reallocate the investment earnings to local projects. So moving on, I am on page 3. Starting with WildStar 1 and 2. In 1987, the legislature authorized any county, municipality, school district, or any other local government entity to participate in the Wyoming Short-Term Asset Return Program, what we now call WildStar 1. The purpose of WildStar 1 is to invest in short-term fixed income investments. In 2016, the legislature adopted Senate File 19. This legislation authorized any county, municipality, school district, or any other local government to participate in WildStar 2, a pooled fund operated by the state treasurer with longer-term redemption options. WildStar 1's primary objectives are risk management and liquidity, and WildStar 2's primary objectives are higher returns while preserving the corpus. WildStar 2 has an increased exposure to risk compared to WildStar 1. Table A on the middle of page 3 provides the number of active participants, the balances, earnings, and total book return for WildStar 1 and 2 for June 30th, 2023 and May 31st, 2024. Just as a note on the active participants, some participants may have multiple accounts. The pool balance and participant earnings as of May 31st do not include the income distribution for May, as it had not occurred when the table was created. The total book return figures reported in the 3rd and 4th columns titled WildStar 1, May 31st, 2024, and WildStar 2, May 31st, 2024, are for the period beginning July 1st, 2023 through May 31st, 2024. A few other things about WildStar 1 and 2. The State Loan and Investment Board has established an IPS statement for both pools. The pools are externally managed by JP Morgan Asset Management, and manager performance is reviewed quarterly by the State Loan and Investment Board's consultant, RVK. The LSO Legal Division performed a nationwide LexisNexis search using parameters that would provide results for permissible investments that local governments are authorized to make. There were several instances where other state statutes did not expressly reference stocks or equities as a permitted investment for local governments. The general trend, as I stated before, appears to be that states who authorize local governments to invest their funds in equities are the exception. The full list of states that LSO identified with relevant statutory provisions relating to permissible investments for local governments is summarized at the back in Appendix A. LSO found 3 states, Colorado, Kentucky, and Minnesota, that have some explicit statutory permissions for equity investments for local governments, including restrictions. And we are on page 4, if you were looking. Colorado has restrictions as to the size of the local government, the type of funds, type of equities, and amounts that may be invested. In addition, Colorado statutes allow for local governments to pool funds for investment in a trust fund, and those investments are limited to instruments that all participating local governments may individually invest in by law. So by statute, if those local governments also met the criteria to invest in equities, an LGIP, local government investment pool, comprised of equities could form. In speaking with a representative from the Legislative Council staff of Colorado, the Colorado Division of Securities confirmed that they did not find any statute or rule prohibiting such a pool, but is unaware of any local government pools that are in existence in practicing investment in equities. Kentucky's statutory provisions require that funds be managed by a professional investment manager who is overseen by a federal regulatory agency. The equities in which funds are invested must also be included within the S&P 500 index and includes restrictions on the amounts that may be invested. They also provide provisions for the purchase of investments, the adoption of an investment policy, the delegation of the investment authority, and financial reporting requirements. Minnesota statutes for local government investment in equities define what entities are eligible to invest, the types of funds, the amounts that may be invested, and the restrictions on the manner of investments. The statutes, somewhat summarized, are listed below and continue on to page 5. Middle of page 5, the Government Finance Officers Association, or the GFOA, is the largest professional organization for public finance officers throughout the US and Canada. The GFOA recommends in their best practices that the primary objective in investing taxpayer funds be safety, liquidity, and returns or yields, and specifically in that order. Safety, meaning investments shall be undertaken in a manner that seeks to ensure the preservation of capital in the overall portfolio. Liquidity, meaning the investment portfolio shall remain sufficiently liquid to meet the operating requirements. And return, meaning the investment portfolio shall be designed with the objective of attaining a market rate of return throughout budgetary and economic cycles, taking into account the investment risk constraints and liquidity needs. In alignment with the GFOA's best practices, LSO did not find any LGIPs, local government investment pools, comprised of equities either run by state or private sector companies. That being said, there are many fixed income LGIPs run by both state and private sector companies designated for short-term or shorter-term investments. LSO spoke with an expert in Treasury investment management and debt management for the GFOA, and although the expert was not completely acquainted with all of the reasons and commentary that has accumulated in the legislation that Wyoming has put forth, they shared that the best practices imply that local governments should not be investing in equities because in general, as I said, they have a higher risk profile than other fixed incomes. As I mentioned, LSO found 2 other instances besides Colorado where local governments individually, not in a pool format, can invest in equities. I will say that the GFOA provides one perspective as to why local governments should be investing in equities. There may be other reasons that should be taken into consideration on an individual basis as to why a local government would or would not choose to invest in equities. So we are on page 6, estimate of investable balances for Wyoming local governments. To estimate the investable balances held by Wyoming local governments, we obtained data on the cash balances and reserves from the Department of Audit. The data was not really reported in a way that we could derive the long-term investable balances, but the DOA recommended certain balance categories that could be more available for investment in stocks or equities, the unassigned cash and unassigned fund balance. These unassigned fund balances include all spendable amounts not included in non-spendable, restricted, assigned, committed, or other classifications. This table is really for illustrative purposes, and the DOA shared that some entities may have funds available for investment in other categories, like assigned funds, but the unassigned balances for this purpose act as the most conservative representation of the potential investable balances. For this analysis, as shown by Table B at the bottom of the page, LSO chose a subset of counties, cities, towns, and special districts that have unassigned cash and unassigned fund balances of over 10 million and greater than 2 times the reported prior year expenditures. This is just one way to perform this analysis. The legislature could certainly find other criteria or methods more compelling. As shown by Table B, 1 county, 3 towns, and 4 special districts, including political subdivisions, met the 2 requirements. The total balance for these entities is $306.8 million for fiscal year 2023. Table C on page 7 is almost identical to Table B, however, requires that the entities have greater than 3 times the reported prior year expenditures. As shown in Table C, 2 towns, 3 special districts met the requirements, and the total balance for these entities is $82 million. Lastly, some consideration of next steps as part of its interim work. The committee is to study alternatives and additional options for investment of local government funds and equities. The following are some next steps the committee may wish to consider. The first is being an assessment of the demand. The demand local governments may have for an LGIP comprised of equities is uncertain. The Treasurer's Office informed LSO that as of late April, they had not received any inquiries, but STO, the State Treasurer's Office, expects that only the larger local governments may have interest. It may be beneficial to have some public testimony about the demand. I think we may have some today. The committee can monitor the development and implementation of the new pool by STO. STO has noted that the SLIB would first need to establish the IPS statement and the investment guidelines. They expect that the LGIP would likely be comprised of a passive strategy for investment really for the S&P 500. And would be run as a low-cost pool with a minimum balance requirement of about 5 to 10 million to be put into the pool. The internal management also allows for no transaction fees and low overhead costs. STO's priority, as they have shared with us, would be to ensure that any participating local government understands the investment risk and limitations on liquidity. They also anticipate providing educational opportunities about the exposure to risk and working closely with local governments. Lastly, if the committee desired, it could develop legislation that would further specify in statutes permissions for local governments to invest in equities and any conditions associated with the investment. STO in public testimony has expressed some concern about local governments investing directly in equities and has suggested some restrictions such as limitation on manager fees. Additional considerations could be to define what funds would be eligible or draw from other state statutes. And with that, I will stand for any questions that you may have.
Committee questions for Catherine on her presentation? Representative Larson.
Thank you, Mr. Chairman. And Catherine, on page 5, when you referenced the 3 states and Kentucky in particular, it was noted in there that school districts also have access to investing in that state's equities. And my question, do you know in Wyoming, as we see some of the other political subdivisions investing, where do schools put their excess cash? Do they have the ability to invest through the state treasurer's office, or is there some other mechanism they use?
Mr. Chairman, Representative Larson, I actually do not. I can get back to you on that.
Thank you.
Further questions for Catherine on her presentation? Okay. Well done, Catherine. You stunned the entire crowd, so.
Yeah, Mr. Chairman.
Brian.
In response to Representative Larson's question, I believe school districts are able to participate, I think, in WildStar 1 and 2, but I couldn't speak to whether, that is where they deposit their funds or not.
Okay. Very good. Jeremiah. Good morning, Jeremiah. Good morning, Commissioner North. David North from Natrona County is here with us today. So we'll start with you, Jeremiah.
Good morning, Mr. Chairman, members of the committee. I'm Jeremiah Riemann here on behalf of the Wyoming County Commissioners Association. I am pleased to be joined at the table by Commissioner Dave North here from Natrona County. I'll start off, and the good commissioner will clean up what I have mistakenly put forward. Mr. Chairman, I want to just start off. I'm not an investment advisor. This is not my typical wheelhouse, but I wanted to make sure that I'm here to articulate the position of the county commissioners, answer your questions, and get back to you as needed. I do want to compliment Ms. Camerati for her analysis. I think it was very helpful in understanding the broader landscape, and I'll certainly reference to it as I provide my testimony. I did want to augment her state-by-state analysis just a little bit. I, too, put out a call to my colleagues across the country to understand what the landscape looks like, and I heard back from 15 of those individuals. And in addition to what Ms. Camerati has provided you, Maryland, Nevada, New Hampshire, North Carolina, Oregon, and Washington all indicated that their local governments cannot participate in investing in equities. I did find that Alaska does allow it, but at this point in time, their city-county organization is not aware of any local governments actually participating in that space, but their association is actually investigating the possibility of opening up a program within their league. The one state that I found, in addition to what Ms. Camerati put forward, that does allow equity investment limited to pension and other post-employee benefits is the state of Virginia. And in that case, their county and municipal organizations have come together and actually offer that program, and currently across the variety of programs that they have over 300 local governments and $3.5 billion invested on behalf of those entities. So just wanted to make sure that I offered that to you. Relative to Ms. Camerati's analysis, we certainly respect the Government Finance Officers Association perspective on the primary investment objectives of safety, liquidity, returns. What I would suggest is that this is a very serious issue that we're talking about and takes careful consideration as we look at it and look to move forward. It takes a thoughtful and conservative approach. However, we do believe that there is the possibility of moving forward in a way that can respect those things if we pursue it appropriately. And certainly Colorado, Kentucky, and Minnesota have examples of components of a program that should be considered. The LSO analysis does mention the three consideration of steps, assessing demand. I'm here to tell you, county commissioners are interested in moving forward. This is not business for all of our local governments. It shouldn't be, but there are some local governments that have the financial resources, the wherewithal, that might be appropriate under, again, the appropriate parameters to move forward. Relative to the state pool, we've never been opposed to that state pool and are appreciative that it is an option that exists there. But I'll just suggest that of the counties that I think may have that wherewithal, none of them have expressed to me that that's the option that they prefer to move forward, that they want to be actively engaged in executing their fiduciary responsibilities and are looking for other options. That's why we asked you for this interim topic and brought it forward. With that, the third point was looking at statutory options. And I did submit a document to you with a couple of options for consideration. I'm just going to go through a few points relative to that document and then would stand for any questions. First off, my document uses county throughout. Obviously, I represent counties, so that's my interest. But I also think that you have to think about who should be working in this space. The constitutional amendment does authorize you the ability to pick and choose who should be investing in this space. And so that's why I kept it to counties, but we're not opposed if you're interested in looking at others to participate in this space. Option one really is to authorize counties to invest directly with Wyoming registered public fund investment advisors. You've heard that other states do allow that, in particular Colorado and Kentucky. And Kentucky in particular requires that those be individuals with a federal backing. So that's certainly something that you could consider under that option. That option allows for direct county to business contact, private sector discussions, allows them to continue working with investment advisors like they do today. Understanding that some of you may not appreciate that option and want to ensure that there's more of a binding, we're putting forward option two, which would allow for, and I want to emphasize, joint and pooled investments. It wouldn't be a county moving alone. It would be counties coming together to look at investment of this kind. And obviously you've heard that at least Colorado allows that particular approach. Strength in numbers is an important consideration and part of our thought process there. There's been some question of us of, so how would you do this? It could happen perhaps through a joint powers board. could happen through a construct similar to the LGLP, the Local Government Liability Pool, or within one of our associations that authorizes, say, a healthcare plan. Could look something similar to that sort of a construct. As you move down there, we talk about security agreements, let me back up. I do want to highlight in the lead to that option too, it says in the same manner as the state treasurer makes long-term investment of state funds. We're not looking for special treatment under this. Again, this is serious business and we understand that the bar has to be high. Moving down, we suggest a number of considerations that should be part of building this out. Some of these may be statutory things that you want to impose, and there are other things that if there was a pool, they should absolutely ensure are considered. Security agreements and custodial agreements, we want to ensure that if we are working through a pool, that the companies we are working with are doing so in the best interests of counties and are custodians of the taxpayer resources that are being invested. Very much similar to what you all deal with on a daily basis. I think one of the most critical components of this is ensuring that we have minimum investment lengths and minimum investment amounts. In terms of lengths, you saw that the State Treasurer's Office is considering that 5 to 7 year time frame. We have had just very initial discussions that we should be looking at that same time horizon. We also think that there might be a pool that might have a much longer time horizon, say 20 plus years, because ultimately that time horizon is one of the most important factors in protecting the resource here. And that gets back to those GFOA particular points. The longer that horizon, the more we can diminish the risk that exists. In terms of minimum investment amounts, see in the Treasurer's Office, 5 million as perhaps a base. Again, we've had conversations that you may have a base of $20 million if you're going to be in that 20-year time horizon. So this all has to be part of the consideration as we work here. But in no case should counties be investing monies that they need in the short term or for immediate needs. We have to evaluate and understand what unobligated funds, uncategorized funds could fit this investment portfolio. We have to consider that. We can't be putting immediate needs at risk. I've got in here standards for competitive bidding. You see that somewhat in the LSO analysis. And very much appreciate the State Treasurer's Office comments relative to investor fees. Those are something that could sink something rather quickly and have to be considered and constrained, and perhaps that's something that can be built into legislation here. We do include a preference for brick and mortar establishments in Wyoming. And I think that's an important component. But a paramount above all else, preservation of the corpus is the absolute end game here, and want to emphasize that that is our biggest priority as we move forward in this conversation. And with that, Mr. Chairman, I would stand for any questions. Appreciate your favorable consideration of looking at some legislative construct that we could move forward with. I'll answer questions, and then I would appreciate you giving the good commissioner some time.
Any questions for Jeremiah? Senator Hicks.
Yeah, Mr. Chairman, Jeremiah, when you went through the list of those items, I think they're all pertinent. Clearly, there's one that, a couple, I guess, that I have a question on that and maybe I just missed it in your presentation. But what threshold, because you go back to the memo that LSOs provided, and they talked about cash reserves versus actual expenditures. Here's your annual budget. this is how much you have. And so when we look at that, some of them are 2 times what their annual budget is for expenditure. And then there's another graph that looks at 3 times. That's important for investing on a long horizon to understand what your annual cash needs are. But the real question I want to ask, and the fundamental difference that I see between local governments and state governments is we project revenue out. Sometimes we have what we call the white rod that's based on the Craig report that looks out 3 bienniums, 6 years. And so how, given the nature of particularly our mineral-dominated counties, that we see our revenues fluctuate greatly based on commodity prices, how far out of the counties projecting what their budgetary needs are versus their reserves? Because fundamentally, that's the question you have to ask for. You do a long-term investment in something that's 5, 10, or 20 years. What is your 6-year revenue forecast, and how are your reserves going to balance that if you get into a deficit? So was there any discussion within your association as is looking at these long-term revenue forecasting? What's the appropriate level of then reserves to have? And then out of that reserves, how much is available for long-term investing and potential equities?
Go ahead.
Thank you, Mr. Chairman, and great questions, Senator Hicks. And I think there's a good former county commissioner sitting next to you, one next to me. They might be able to offer some perspective about how they go about that. But what I'll try and do is respond from my seat. The transition from our former system of mineral ad valorem to a monthly payment system really did change at least our association perspective on trying to look at those long-term revenues, because we're now treating mineral revenues, mineral ad valorem revenues, very similar to sales and use tax, which have those highs and lows. And it's forced me to work more closely with your staff in understanding what that looks like. And we put out an annual revenue estimating manual for counties. If you looked at that document, you would see historically we only provide projections out 1 year. When we went to mineral ad valorem, we were able to work very closely with Craig, and I'm now providing data, at least on that particular set of information, out 4 and 5 years to give the commissioners a little bit better understanding and feel for where they need to go. I think a lot of commissioners are having very serious conversations in some of those communities that you talk about of how can they start to reduce their expenditures now in advance of what will likely be a downturn in those mineral revenues. So you'll see Campbell County, for example, talking as much as $25 and $50 million cuts in order to have the wherewithal to move through this and protect the corpus that they have. I wouldn't suggest to you sitting here today that we've gotten to the depth of what is that magic number of uncommitted funds that a county might need to consider or have in place in order to move into this space. But that's exactly what I'm conveying to you here, that that's a threshold that we need to establish if we move this concept forward, so that we aren't putting risks, putting things in place that are going to provide risks in the immediate and short term for local governments.
Commissioner North, do you have any thoughts on that question?
I think that was a great question. I will give you that it's a tough question. And for all the county commissioners across the state, I think that's something that we're going to have to start looking at, not just an annual budget, but start projecting further out so we can actually adjust as we need to, because that is, with the cost of everything going up, we just aren't getting the bang for our buck that we used to get. and everything has gotten more expensive all the way across the board. So I think we're going to have to start looking at a long term and not just, I mean, we're doing our annual budgets, but I do think that that's important that we go through and we start looking at the long term and do similar things like what we do with the 1 cent right now, where we project, you know, how much we're going to spend on different things in each of the 4 years that we have that. I think that's something that we are going to have to really spend a lot more time on and start looking at where our costs are going to be hitting us hard in the future and moving forward with that. And I do agree. If we've got a lot of taxes that are going to change dramatically, especially if we don't have a change in administration. So that's going to affect us all. That's going to affect the entire state. And so having options that we can invest in different things, that's going to help us out a lot as far as being able to look and project how we invest that corpus and not touch it, you know, just use that interest. And I think that's one thing that the counties across the state, I think that's one of the major things that we really want, is to be able to look at different options and try to get the most bang for the buck, but not put ourselves in a fiduciary problem where we aren't taking care of that responsibility and the revenue that we have and protecting that. So I hope that answers your questions.
Follow up, Senator Hicks?
Yeah, Mr. Chairman, so that's just a real quick follow-up, because really that becomes the crux of the problem for long-term investing. And when I look at the stuff that LSO and you look at the 2 times your annual budget, we're down to 7 entities in the entire state that fall underneath that criteria. And if you get to that 3 times what your annual budget that you have in cash reserves, it's even smaller. And so to look out on the horizon, it makes it very difficult without knowing what your income stream is. The volatility is with the mineral, and particularly where we're at now, makes that difficult. The other question I have, something that we do is when a fund loses money before it pays out any dividends are derived, go back and pay for those losses. Is that any conversation that you guys have had if we set something up? In other words, that's pretty important, so you don't take your money out when you hit a loss, and then when you do get dividends, so you don't diminish the corpus, that any dividends come back in. And that's what we do with a lot of our permanent funds within the state of Wyoming. And I would just curious as if you guys have given that any thought in these long-term horizons, whether that's something you would want to build into it. And then also is part of the conversation needs to be, can you spend the interest to realize capital gains off of those, or do those automatically stay in there? So there's a lot of questions that have to be fleshed out, but just conversations as you're having within the commissioners and stuff on potential setting something up or things that we're going to have to answer.
Jeremiah?
Yeah, Mr. Chairman, Senator Hicks, you're hitting all the conversations that we need to have here, but it's sort of that chicken and egg situation of how much do we invest in this without understanding whether you might allow us to move forward. So we want to invest, we want to have those conversations. As you can see, we're trying to put forward what we know we have to discuss, and what you're putting forward is a critical part of that. But we haven't had the entirety of those sorts of detailed conversations, at least not in my office yet. Perhaps the commissioner has, but I think you're getting at more broadly here, ensuring that we're not making rash decisions in this process. And that's where we have to have very defined parameters that once you put those monies in, you are committed to this, and you have to have the wherewithal to make it through that in order to not jeopardize the corpus of the taxpayer funding that you're managing here. And so, yes, those are conversations we will have if we have your blessing to start developing this sort of a program. And perhaps if I can, just back to your original question, I think part of the reason that many governments are interested, my members are interested in this, I think part of why Natrona County is interested in this is that if we can pursue this appropriately, those investment options ultimately are going to help insulate against some of those downturns, just in the same way that the state is a bit more insulated right now because of the vast portfolio that you have out there and that you're able to now generate about a third of the state's annual budget off of those investment returns. I think that's what some of the counties, in particular Natrona County, is looking for.
Senator Guru, and then I'll get to you, Senator Steinmetz.
Thank you, Mr. Chairman. Just to follow up with Senator Hicks there in his line of questioning as we go through this. And Jeremiah, you and I have talked about this, and I'm really glad to see Commissioner North there. Thanks for being here. I too, as we go through this, really want to have a robust discussion about the risks and how we can set this up so everybody knows, no matter what all these investment vehicles are all set up to do, as we talk about, give you the tools and give local governments the same tools that we're using. But it's got to be with an eyes wide open approach. And we always talk about, hey, we want to make sure to look at how much we can make with this investment versus this. I always, in my business, I always challenge my staff and everyone around me to say, well, that's the good scenario. That's great. Now let's talk about the bad scenario. Let's talk about what happens if we lose 10%. What happens if the markets all go down? Because as everybody knows who does any investing at all, when you buy an investment vehicle, you're buying it because you believe it's going to go up. 9 times out of 10, you're buying it from someone who's equally convinced that it's going to go down. And so you got to keep that in mind. One of you is going to be right. And, that's why, we're talking about this whole deal is to talk about whether it's with the STO or whether the private side, and I was very cognizant in Catherine's report too about, maybe sideboards on cost and fees, because it's one of the reasons why we did the change and moved everything in-house to do that. We've saved a lot of money with that, but that too comes at cost. So my question is, and I know you were addressing it there, is that, as we go through, I want to hear from your members about that you have mechanisms to really delve into that. So everybody on these boards knows what the risks are, what we're getting into. And so then we don't, have any, second guessing or, back of the bench, carping at the end of the day, that everybody knows eyes wide open what everyone's getting into. Wouldn't you agree with that, Mr. Riemann?
Go ahead.
Yeah, Mr. Chairman, Senator Guru, absolutely wholeheartedly agree with it. And quite frankly, we've got somebody to look up to here in terms of how this can be done successfully, and that is the state of Wyoming. And we need to learn from your lessons and follow that model and continue to work with the State Treasurer's Office to ensure that we can, again, protect the corpus of this investment.
Senator Steinmetz.
Thank you, Mr. Chairman. That leads perfectly into my question on option 1, authorizing counties to invest directly with Wyoming registered public funds investment advisors. I'm just curious as to why you wouldn't want to utilize the State Treasurer's Office when we have invested so much money into our investment staff and the back office to try to build that out and make sure. I think we've got some experts in the field. So what would be the advantage to go to a private investor, 1, and 2, as an elected official and the commissioner sitting before us, we know how much work our jobs entail already. And so to take on investing and hiring a broker and doing all of those things, is that a responsibility you would really like to take on? Thank you.
Jeremiah, followed by Commissioner North, maybe to answer the second half of that question.
Yeah, thank you, Mr. Chairman and Senator Steinmetz. Good questions. And again, we're not opposed to the WyoStar 3 option that now exists or will exist once the the rules are put in place. I think there are a few things that I'm hearing from commissioners, and this is not an us against them. I really don't see it as such. But what I'm hearing from county commissioners across the state is that they want to be more active in understanding how their investments are being made and to play a role in that particular work. They don't want to just send their money off and that it's passively invested on their behalf. And not to be critical of the state treasurer's office, because I think there are ways that we can work through this, but the state treasurer's office, in terms of the state portfolio, is incentivized to maximize the returns on your behalf. You've built in incentive bonuses and other things that really demand their attention and focus there. And I think that some counties feel that same sort of attention doesn't exist on the other side because they're not incentivized to maximize the local government investment. Again, we can fix that, but who pays for that, et cetera. And so my members are saying, hey, can we be more active in our investments and participate in that? And can we look at some of these other options that exist where we could continue to work with our investment advisors under, say, option 1 that we already currently have in place?
Commissioner North, do you want to take the second half of that question?
Jeremiah hit that right on the head. I mean, that's exactly what it comes down to, is that we just want to be more involved so that we have some input on how that is invested. We're not saying that the state's doing a bad job. We just want to have that ability to have a little bit more say in where that is. I do not want to be an investment advisor at all. But I do like to have the information presented and see what our options are. And that's really what it comes down to. It's just, it comes back to us having options and looking at different things. And we may have something that we want to invest short-term because we've got something coming up within 6 months. And we can still get a pretty good return on that investment, even if it's on a short term. And so it just gives us options to look at different things and look at different ways that we can do it so that we can be more responsible to the citizens of our counties and to make sure that we're doing the best we can to make sure that our budgets are all, fulfilled, our requirements are fulfilled. And so I'm not quite sure how else to answer that other than that I don't think any of the county commissioners really want to be the ones that have to make all those decisions, but we just want to be able to be involved and allowed to be involved with what choices we have.
Senator Hicks?
Yeah, Mr. Chairman, and it's a laudable goal, Jeremiah, because it is a very important component of the state's revenue stream is the interest in dividends. And it can be up to 30% of but there's a fundamental difference in what we're talking about here and what the state was, is because those are inviolate corpuses. And so we can invest on a 30-year horizon. We can take $500 million hit 1 year, which we've just gone through, and lose that and then gain it back because of the horizon. And so it's very difficult to achieve that kind of certainty when you're have the potential for somebody just even on a 5-year or a 10-year, taking all that money out of there, depending on market conditions or local demand or need and stuff. And so maybe that's another area that we need to explore is maybe part of this could be an inviolate fund, something set up as a trust fund for the counties or municipalities if they wanted to do that. That's a question for you guys. Is that something that you would like to explore? Because that really gets to that issue of that is a long-term horizon when you have an inviolate corpus. But that is the fundamental difference between what the state does and what you're at, or the contemplation here.
Yep.
Go ahead.
Mr. Chairman, Senator Hicks, The short answer is yes, we're interested in that conversation. I was struck by that distinction in the LSO analysis, although as the LSO analysis also suggests, there are some non-permanent funds that the legislature has the ability to invest in equities. And so I think we're interested in both sides of that ledger, but that permanent component certainly struck me in that analysis.
Representative Knapp?
Mr. Chairman, thank you. So Jeremiah, do you think that it involves some time and some education for the commissioners, or for the counties at least, because with GFOA saying in priority, safety, liquidity, and then percentage of an investment return, most counties put money away with the idea of a maintenance fund or with the idea of replacement costs. I understand that they want a good return on that money, but because that money exists for those reasons, sometimes you're stuck with the short term. So is it a matter of education too for the counties?
Yeah, Mr. Chairman, Representative Knapp, absolutely. And I want to emphasize it to the degree I haven't, if we go this route, if you authorize this route, we're not going to open up a plan tomorrow. It's going to take some time to develop this out so that we can answer all those questions and make sure that I feel comfortable moving forward with any sort of a pool or approach that any county should get into. You're right. Most of the savings that are set aside are for particular obligations. You've got a new courthouse that you need to renovate or build. You've got capital investments elsewhere in the community. But I do think there are some counties that have unobligated, unrestricted funds right now, which might lend to this. I'm not going to say they will lend to this as we build this ship. It may suggest, no, you shouldn't get into this, but I do think there are some counties where we do have this space of unobligated funds that, again, might lend to this approach.
Further questions?
May I add a little bit more to that?
Go ahead, Commissioner North.
Mr. Chairman, Representative Knapp, I agree with what you're saying. And one of the things, we have unrestricted funds in Natrona County. As far as I'm concerned, what I prefer to do is not to touch that corpus, but only utilize what you have in interest after it's already been achieved. So that way you don't have to worry about that. I'm not saying about doing this with a lot of the other funding. I'm saying doing this with the unrestricted funds that we have that are not obligated toward other things. And that way you don't have to worry about hitting that corpus. That way you can, if you do lose, not get as much interest 1 year, you have to adjust your budget, but you're not relying on that until you already have that money in hand. That's the way I look at it. That's the way I prefer to do things, is to spend the money that you already know you have and not project it.
Further questions? I have a couple, Jeremiah. If we move to option 1 to start with, and just magic wand it here and approve that, but then put some sideboards on it that said not more than 25% of a county's entire investment portfolio can be in equities. The county must have a certain size of pool before they would even be eligible to move into that category. What thresholds and sideboards would you put onto that kind of a thought process or an idea, if we're talking just option 1 in your memo at this point?
Yeah, Mr. Chairman, I think that the Colorado and Kentucky frameworks provide something worth considering as a starting point that we can then work through what the exact numbers are. But I was certainly struck by, there's already an approach out there. Could we adopt something similar to that?
Okay, very good. And then on option 2, just trying to better understand what you're describing there, do you envision the County Commissioners Association being the point of contact that creates this pool, and then your association goes out based on your members' vote, if you will, and hires the fund manager that puts these pools together, but it's all warehoused through your association? Or how do you envision that structure? Or do you envision it being through the state treasurer's office and working with the state treasurer's office, saying, we would like to have a pool for county commissioners, and this is how we want it to operate, and set up some sideboards and parameters that way, but all through the state treasurer's office? Because your bullet points on the safeguards make sense, but we have to get it set up before we can put the safeguards in place. And so I guess we skipped the setup stage in my reading of this.
Yeah, Mr. Chairman, I'm not certain that we need to do the setup first. I certainly wouldn't expend that time on my side without understanding whether you might authorize us to move in that space, because it's going to require a significant financial contribution to do that, the attorneys, the others to establish that pool. But the short answer to your question about option 2 is that there are several different possibilities that could be taken here. One of those could be a joint powers board that the counties and perhaps others, depending on who you authorized, would establish in order to do this work, which could look like the LGLP model. Another one that we have, and we've talked about both of these, we haven't made any final conclusions, but another option is, yes, that we would look at doing something inside of our association, of course, with the appropriate financial advisors that could lead us towards an appropriate approach. So both of those are options, and maybe there are others. I didn't want to be so prescriptive in what I put here because there are other options.
Very good. Further questions for Jeremiah? All right. Great answers. Stay close. I think we're going to have a few more questions as we proceed through this topic today.
Thank you.
Municipalities, I'm not sure who's here representing the Municipality Association or municipalities. Go ahead.
Chairman Walters, Justin Schilling on behalf of the Wyoming Association of Municipalities. I'm joined today by Jill Johnson, who is the Finance Director for our host city of Casper. I'll open with a few thoughts from WHAM. Obviously, this has been a multi-year process to get to where we are now with the opportunity to see some higher rate of return on our investments. When we began this process, all the way back with the joint resolution, our folks, and especially the folks in our legislative leadership committee, as well as our board of directors, have talked about the idea of options. We got one step towards options this last year with Senate File 90. I will tell you that we do have interest within our communities. They know that that's an ongoing conversation. That's what we've communicated to them, is that that's an ongoing conversation with the treasurer's office as those rules are promulgated. So if they haven't heard from our communities directly, it's not because there is an interest, it's that we've told them that, we're on it. And that we're looking to get those rules promulgated in a way that'll be an attractive option. To Senator Steinmetz's previous question, to the previous testimony about why in an option A scenario, our folks, in a previously mentioned option A scenario, why our folks would prefer to work with a private investment advisor as opposed to the treasurer's office. I do think the treasurer's office has significant skill and significant expertise, but as it was stated in open testimony, as Senate File 90 was considered during this last legislative session, the intent is to keep creative costs low for this particular program for WildStar 3, with the intent to basically look at an S&P 500 index fund, as opposed to getting a little further into their expertise. And so Obviously, if that's the intent and that's kind of where that fund is headed, there are certainly plenty of investment advisors, private investment advisors that could deliver similar results, if not the exact same results. I think what comes from my membership and their interest in something along the lines of the option A that was previously mentioned is just relationships with those brick and mortar investment advisors. They've worked with some of these folks for years when it comes to their bond investments and what has been previously allowed prior to the constitutional amendment. They've built trust with those brick and mortar investment advisors. So I think they'd like the opportunity if that's allowed and through the treasurer's office, they'd like the opportunity to basically pursue the same investment with those folks that they have those relationships with. I think the other latitude there too, I'll bring up a specific city example. The city of Powell was one that was very instrumental in making sure that we kept the whip to the horse when it came to the constitutional amendment and that effort and getting that passed. And their particular or their specific example was one where they have an endowment for their city pool. They have $2 million set aside in an endowment for their city pool. Obviously, as currently considered through the treasurer's office, that wouldn't make the minimum. But their intent is that those funds be basically permanently invested with the idea that any gains they would see would be used for maintenance and upkeep, improvement at the pool. So I think because of the size discrepancy amongst a lot of our communities, the latitude for some of our smaller communities that still want basically a permanent investment option is when you say there's a $5 or a $10 million minimum is obviously going to negate their opportunity to participate. So a couple of thoughts there. I think our motivation in asking for this is an interim topic, and we thank the committee for taking the time and agreeing to spend some of your work in the interim on this was just the idea that, our folks do want to kind of explore the options. Jeremiah's previous testimony on pools, we'd be interested in working through that process. We have talked about, within our association, whether that's something we would want to be involved with. If that was, if it was to kind of fall to the association management level, as most of you know, WHAM does basically operate and facilitate a health plan, WHAM JPIC that we operate and is administered by Blue Cross Blue Shield, but that's available in a lot of our smaller communities as well as joint powers. Boards participate in that to be able to offer healthcare to their folks. So, and there are other municipal leagues across the country and my peers that I've talked to that do operate investment vehicles, but they're obviously not in equities. They're more of the bond and securities vehicles that we've traditionally been allowed to participate in. So again, we're here to say that we're ready to go to work on this, to provide any information the committee might need in making these decisions. And again, we thank you for your time and consideration on this. With that, I would be open to any questions, and then if the committee would so please to offer Jill Johnson some time as well.
Questions for Justin? Senator Hicks.
So if we were to go down the route to allow local government entities to use local investment professionals, how do you anticipate or would you evaluate their performance against established benchmarks? That's the way the industry works. How are you going to do that at the local level? And walk me through that process and how you see that may work. Because obviously, your fiduciary responsibility is to get the highest return on your investment and then be accountable for that. So how do you go about with your local investment firm looking at those benchmarks to make sure they're actually meeting those?
Sure. Mr. Chairman, Senator Hicks, thank you for an excellent question. Interestingly enough, in the 6 years that I've been with WHAM and have followed the available investment vehicles that our folks have had. It's amazing how competitive the bond investment companies have been. There's not a whole lot of them, that are in that space, but as it was when interest rates were very, very low, there was a lot of bragging rights if you had 1/10 or 0.2% better, performance over the previous year, and that was a selling point amongst those companies. I think, private industry competition has done a good job of making sure that folks know who's getting their folks their best customer service. And I think that's one of the reasons that folks are interested in that option over, again, just the treasurer's office or the WildStar 3 option. Is there's not really any competition there. Whereas with working with some of these private investment advisors, they know that those folks are, trying to earn their business. As far as the performance of those funds, they advertise it very, very publicly, especially if they think that they've outdone their competition. But I think they're, just like the state tracks the performance of all the different investment firms that handle the different pieces of the state's portfolio. I think if they're handling public money, there might be some reporting structure that we might be able to work out, or those kinds of things, to where people, because I think the public deserves to be able to access that information as well.
Further questions for Justin? Senator Guru, I apologize.
Oh, no worries, Mr. Chairman. Thank you. Justin, just back to the demand question. Have you talked to your members? What do you think the demand is at WAM on this?
Mr. Chairman, Senator Guru, I really think it boils down again to kind of the parameters and the minimums, not only minimum on dollar amount, but time thresholds as to what kind of participation we would see. Given the treasurer's kind of proposed minimums and time thresholds, we're probably well under a dozen of the 99 municipalities that would have the latitude to do that responsibly. If there were some other opportunities there, whether that was through private investment advisors or the treasurer's office gave a little on those, you might pick up another 5 or 6, I would say.
Thank you.
Further questions for Justin? Senator Steinmetz.
Thank you, Mr. Chairman. I think a follow-up to Senator Hicks's question, because we were discussing, we kind of had the same one. So the state spends, I don't know how much money, Brian could probably tell us, on RVK, which is a consulting firm that goes through all of our investments, making sure we meet our benchmarks, all of that, which there's an expense to that, there's a cost to that. So if you were in the state treasurer's office, that would be a service that, would be, we're already evaluating that. So I think the question is, are you willing to pay for that? What are you thinking? How would the mechanics of this work? Because it's an extremely important investment you're making of public funds.
Sure. Mr. Chairman, Senator Steinmetz, I couldn't agree more. That would be a mechanism that we would have to figure out if the committee, it gives us the idea or gives us the inclination that you guys might be open to this. I think that would be something that would have to be sussed out, between here and the end of the interim, and then, obviously included in any potential legislation going into the session, would be how do we measure that? How do we report that? I think that would kind of require bringing in some of those private investment firms that currently kind of handle the majority of the bond investment for our communities to kind of to get their thoughts on how we could do that efficiently, but also probably some conversations with the treasurer's office to see what we could borrow from their model to make sure that we have proper oversight of the firms that might be considered and what type of work they're doing for our communities.
Further questions for Justin? All right, Jill, anything you'd like to offer?
Thank you, Mr. Chairman. Oh, sorry. Thank you, Mr. Chairman. I have a prepared statement. I've also provided that to the committee.
Yep.
If you don't mind, could I go through that?
Yes, hit the high points.
Thank you. So again, my name is Jill Johnson, and I'm the Financial Services Director for the City of Casper. In that capacity, one of my duties is to serve as a city treasurer, and as such, I am charged with overseeing the city's investment portfolio.
Jill, could you just get a little friendlier with the
Oh,
mic,
I'm
please?
sorry. Of course. Is this better? Okay. The city of Casper has worked very hard over the years to develop a large and diversified pool of investments. As the second largest city in Wyoming, Casper has an annual budget of $193 million. This budget is supported with statutorily approved municipal investments. Like most cities, the city of Casper has adopted fund reserve policies. Per these policies, most of the city's operational units must be backed by reserves that are at least the cost of 90 days of municipal operations. Plus, we have additional funding for principal loan payments, for depreciation of capital assets, and for the purchase of foreseeable capital expenses. These policies exist because Wyoming's economy is known to suffer sudden and dramatic changes. Fund reserves allow the city to be a steward of the services that are required by the public. These reserves would allow us to continue to operate for an extended period of time, even in the event of a sudden financial downturn. In addition to these required reserves, the city also has a council-directed corpus restriction on $30.6 million for perpetual care. The investment income derived from these funds is utilized for two main purposes. The first one is to establish maintenance for our buildings, which are created with our 1% funds, and also to provide recreational subsidies for ensuring all of our citizens have access to facilities. Finally, as a way to provide funding for the State Fire Fund A pension shortfall, the city has funded a sinking fund to provide investment income to support repayment of the state loan. The sinking fund term is 20 years, which coincides with the repayment requirement by the state. The total of these non-spendable, non-operational funds could provide the initial investment into equities. The city of Casper's investments are currently valued at $191 million. Though our investments primarily exist as reserves, they do serve a secondary function of providing revenue to the city. For an organization of our size, this amounts to a very significant source of operational funding. The city of Casper has already earned $4.7 million in investment revenue citywide for the current fiscal year. Increased investment income provides the ability to provide necessary services to the citizens of Casper without increasing taxes. Per policy, the city invests in a highly diversified manner. Funds are held in U.S. Treasuries, federal agency investments, corporate bonds, and 3 local government investment pools. Though returns on these investments have been admirable, those earnings have been held back by the statutes and constitutional restrictions that limit how Wyoming municipalities are allowed to invest. Specifically, municipalities have historically been prevented from investing in equities. The state government has had the ability to invest in equity since 1996, but local governments have not. As the committee well knows, municipal investment restrictions were greatly relaxed with the passage of Constitutional Amendment A in November of 2022. Through that amendment, the voters gave cities, counties, and special districts the ability to invest in a manner that reflects the freedoms that had previously only been enjoyed by the state. Earlier this year, the state legislature passed Senate File 90, which enhanced Wyoming Statute 9-4-831 with new language that would have the effect of enabling Amendment A. Senate File 90 did this by authorizing the creation of an investment fund that would be a third local investment pool. This third pool would allow the investment in equities subject to rules that would be adopted by the state treasurer. The city is a long-term investor in the 2 state investment pools, WyoStar 1 and WyoStar 2. In addition, the city also invests in the Wyoming Government Investment Fund, which is called WGIF. Unfortunately, these pools have some inherent problems. By their nature, investment pools take the investor's cash and then purchase a pool of assets. The city of Casper has historically been one of those investors in each pool, and as such, the city would have a percentage share in all the assets within that pool. However, there are some drawbacks. First of all, there is no local control over this pool. The pool is guided by the state investment manager, and as that manager rebalances the investments, the members of the pool have their assets rearranged without their specific approval. Likewise, the investment manager will try to serve the collective will of the investors in the pool. It is sometimes the case that individual investors may have different goals. Individual investors can choose to liquidate their assets at any time. This can have a negative impact on the entire pool, and by extension, the actions of one investor can harm the investment of other pool members. This actually happened in November of 2023. One member of the WyoStar pool chose to liquidate their bonds in a large and unexpected manner. The pool, as a matter of course, was forced to sell certain bonds at a loss. The loss affected all investors, as a matter of course, including the city of Casper, which suffered an immediate realized loss. In addition to the realized loss from the pool, the city investments became a large percentage of the total pool. The city, in order to manage risk, ensures that assets allocated to the city are not more than 10 to 15% of the total pool. Assets in the pool needed to be reallocated to other investments to maintain this risk reduction strategy. The city of Casper supported the passage of Amendment A. The city of Casper is currently invested in the state's existing local government pools, WyoStar 1 and WyoStar 2. However, the city of Casper would prefer not to be limited to a new state-run investment pool, a WyoStar 3, in order to invest in equities. Allowing the local governments to manage their own investments avoids many of the problems that are inherent to pooled investments. But the legislature, understandably, may want to implement rules and procedures to ensure that local governments are investing in a wise and legal manner. With that in mind, we encourage this committee to advocate for the further revision to Wyoming Statute 9-4-831, specifically, create a path that would allow localities to invest in equities without the need for a state-managed investment pool. Require localities to engage with a professional portfolio manager. To reduce and mitigate risk, require localities to ensure diversification of the equities and develop a starting target rate. And finally, to restrict localities from being day traders. The city has engaged through an RFP process with a professional portfolio manager to handle the vast majority of our investments. WyoStar 1, WyoStar 2, and the WIGIF Fund now make up a relatively small portion of the total. These investments are overseen by myself, the city manager, and our city council. In addition, the city engages with a citizen investment advisory committee who reviews and recommends investment changes based not just on performance, but also in keeping with the city's investment goals of legality, safety, liquidity, and return on investment, in that order. This committee provides insight, advice, and policy guidance in regards to how the city's investments should be managed. In this way, the city has exercised a high degree of autonomy and professionalism in regards to its investment strategy, and we believe that the investment returns enjoyed by the city are a testament to the sound strategies that the city has employed. It is understood that Wyoming Statute 9-4-831 has been written to set up a third investment pool. Though the city of Casper would prefer to invest in equities without the pool, there are some ways to make pools more appealing as an investment vessel for the from the city's perspective. To that end, some of the suggestions the city of Casper would provide would be to make WyoStar 3 an investment pool comprised of equities only. So unlike WyoStar 1 and WyoStar 2, WyoStar 3 should not include any fixed income investments. Require a minimum investment period. 5 to 7 years is what I've heard, and that is what we would recommend. Develop a withdrawal penalty or structure that would impact only the offending participant and not the pool as a whole. Even with these additional structures, the city may or may not take advantage of an equity pool dependent on achieving the investment goals established by the city and the risk to the city of being a participant. With that, I would answer any questions you may have.
Questions for Jill? Senator Hicks.
Yeah, real quickly, Jill, with the current 191 million that you have under investments, do you know how many basis points that it cost you to administer that $191 million? How much are you spending to do those investments?
Chairman, Senator, we pay 12 basis points to manage our investments. Out of our total investment pool, only $151 million is in that separate group that gets charged that 12 basis points.
All right, thank you.
Further questions for Jill or for Justin while they're at the table? All right. Representative Harshman.
And your return, kind of your historic return on that, just can you tell us on your?
Chairman, Representative, our return currently, our yield to maturity is 4.7, I believe.
Thank you.
Representative Obermuller.
Thank you, Mr. Chairman. In listening to your testimony, it kind of struck me to the problem of sharing that space in WIO Star 2 and WIO Star 3, actually, with other investors that you can't control their activity. Is there anything short of just doing your own thing that solves that issue of somebody dumping their investments early in either one of these accounts?
Chairman, Representative, thank you for that question. We did suggest some options within my testimony. Again, these could be some of the things that we could do, maybe develop some type of early withdrawal penalties or some way to only, and I don't want to say penalize because I don't think that's the right word, but to help people to maybe not pull out their investments if something happens where it's more of a knee-jerk reaction, but to have them continue within the pool so that the impact would be reduced.
Further questions for Justin or Jill? Okay. Justin.
One very quick thing, if I could, Representative Walters. Jill brings up a good point about the makeup of the state pool of WIO Star 3. They had initially proposed that it would be kind of an all-in-one that would include some equities, but it would also include, some other kind of previously allowed investment vehicles. We stated also, as those rules were promulgated, that we would prefer that it was an equities only, that folks would have to say, provide some proof that it was only this percentage, whatever the cap percentage was of their total investment portfolio. But the reason we did that is if the state's the only option where equity investment is available, it would take away potentially from the private industry folks that are already delivering on that bond investment and those other currently allowed investment vehicles. Because if you're forced to go with the state, it could potentially cause some harm to those brick and mortars. If it's the only opportunity for it and it's the only part of that investment pool, then that works better and doesn't potentially, like I say, take business away from those outside entities.
Okay. Further questions? All right, thanks. Thank you for your testimony today. Anyone from special districts, school districts, political subdivisions that would like to testify? Before we move into general public comment, but we'll start with school districts or special districts or anyone in those categories.
Thank you, Mr. Chairman. My name is Kirk Schmidt. I'm retired now, but I spent 38 years working in school finance. So that's what brings me here today is to talk about that part of it. Just a couple things. If you ever have an opportunity to listen to a GFOA presentation on public investments, I would encourage you to do so. LSO did a great job, but I think it's the light version of how GFOA really feels about safety when it comes to public funds. Every year that I went to a national meeting where they were making a presentation, I was just shocked at the number of government entities around the United States that took risk and got beat bad. I mean, you would be shocked. Would you just sit there and go, why would they do that? I mean, it really is scary. And what's interesting is all the questions that have come up right now leads to the next part of this, where Senate File 90 just leaves the state treasurer's office the only option for everyone. And that's okay, but the state treasurer's office isn't in the business of sitting down with individual entities and doing the things that Senator Hicks and Senator Garou brought up, cash flow analysis, setting benchmarks. I suspect that you put that out and let private investment advisors deal with people. I would be willing to bet that the majority of them that sit down are going to talk those clients out of going into the equity market. That would be my guess. I mean, it's risky. Each entity is going to have its own unique needs. If it's servicing a sinking fund for some kind, they're going to have a revenue stream to do that. And how many entities really have the dollars to put into an equity fund to really make that work? I think you need to add to let the free market take care of itself, because that is going to prevent people, I think, from making mistakes. Now, I've always been a firm believer in local control, but I think that if you put in there the privatization, I think you need to set up some very heavy sideboards to where entities can't go out and look at the equity market just because they think it's a great idea. I can't even tell you the number of the times, and you know all your school board members for all your years in your districts. You can only imagine the school board members that I ran into that were financial experts that wanted to tell me where I was wrong and where I wasn't. And I'm going, well, I'm wrong sometimes, but there's a lot of times I'm right. And the same, that's true of all elected officials. Some people get in there, and in this case, everybody thinks they're a financial expert. And that's where, if you have an individual investment advisor sitting down with those elected officials, one person isn't going to convince the rest of them to make a bad mistake. The facts are the facts, no matter what they are. And like I said, the state treasurer's office isn't built to do that. That's not what they're for. That's where the individual, the private market is. That's what they do for a living. And I would encourage the committee to consider expanding that to allow that to happen. Representative Larson asked a question about school districts. If they have investments in all those different areas, the LGIPs, WildStar 1, WildStar 2, if you apply the same criteria that LSO did as far as 2 times their average, there might be a handful of school districts in the state that have that much money. Now, could they do it? Maybe. But then again, you get back into it. I mean, I'd just cringe if I ever had to sit in front of a school board and say, well, you know, we lost $2 or $3 million last month. You know, that was just tough luck. I don't know that I would have survived 38 years if I did that once. You know, and you can imagine as a citizen, if you're sitting there reading your local paper going, what in the world were they doing that they lost that kind of money? I mean, it's scary, and it's going to be tough. I'll be anxious to see where it heads up. Thank you, Mr. Chairman.
Questions for Kurt? Thank you for your comments, very insightful. All right, moving on, public comment. Anyone in the public that would like to offer comment or ideas on how to structure these investment opportunities? Anyone in the public?
Morning, Mr. Chairman, members of the committee. Scott Meyer on behalf of the Wyoming Bankers Association. I wanted to just tell you that we would either stand in support or oppose this. But I do think that there are some things that we would like to make sure that this legislative committee, as well as my good friends from the county commissioners, WAM, and even the school districts, understand what is at hand and how it affects everybody here. And as I look at this group, I will tell you that there is not a single member of this committee that doesn't live in or very near a community or in a county that I haven't received a comment from banks that say, here's the issue that I see coming up. It's not something that we have to be opposed to or support of, but here's the issues that are coming up. I think that the legislature, the LSO office did a great job explaining WildStar 1, 2, and 3. But understand that WildStar 1 was a short-term type of deal, and even your banks got involved with that to help whatever they could. WildStar 2 and WildStar 3 now, not so much. We understand that every one of these political subdivisions that are out there have a fiduciary duty, and it's imperative that they follow that, and they make sure that they do the things that are required of them. And that means they have to have the best return on their investments and the ability to have liquidity and the ability to have security. That's imperative. And every one of these political subdivisions and school districts need to have options, and we understand that too. They also need to have the ability to withstand losses when they come, because they always do. And I think that comment that Senator Giroux made, that, you know, for everybody who's buying, there's somebody selling, and we have different opinions. And so I think those are out there. And then there's always the idea of what comes on with between short-term and long-term. But where is that risk of loss? When you ask for higher returns, at what cost? And if you're trying to make sure you preserve your corpus, and you talk a little bit about private investors, local investment professionals, how does that play into this? And we are concerned. Yes, free market should apply. And yes, we need to have some local control, because I think, as the previous testimony was, that, you know, that maybe is not what the state does very well. They don't meet with individuals, and so that is always important. But then comes your community banks, and I will tell you right now that your community banks are not the end all to every question that we have on investments. They certainly are not. But your community banks are struggling a little bit to keep competitive here. And why is that? Well, if you look at Wyoming Statute 94804, I believe, that says, guess what? If you're going to invest, put any money from these political subdivisions in with a bank, it has to have security. Anything over $250,000, it has to be backed, because the FDIC does not back that. So banks have to pledge securities. That means T-bills, anything else that's out there. Is that come at a cost? It sure does. Our hands are tied a little bit on that. Then comes the Community Reinvestment Act. It's a federal statute that banks have to apply to and have to conform with. That means banks have to lend to low-income districts, low-income population, depressed populations, things that have to happen there that are vital to our communities. So who is supporting these communities? And what are the banks doing? They are the ones that are supporting your local businesses. And that's why I say, I hear from every one of your communities. They say, by the way, we are supporting small businesses. Small businesses are the backbone of this country. And the banks are the ones that are supporting it, whether it's you're trying to start buy your first home, whether you're trying to have a new business and you have a line of credit. All those things come from your community banks. So what happens then when, and don't forget, you know, and I hate to kick a dead horse here, but what happens with PPP? It was your community banks that stood up and said, we will help take care of this. So what happens when a political subdivision, a county, a municipality, a school district pulls out money and says, we're going to invest in WildStar 2 or 3, or even a private investor? What happens with that? These banks are telling me that in various communities, we're losing $3 to $5 to $10 million a pop to make sure that we can invest in these other things. That is money that will not be available
to land to our local communities, to those small businesses, to the people that are in that community. And I think that that's important for the legislature to understand that while we are not the answer to everything, we are one of those people that say there is a difference. There are other ways to measure the rate of return besides just dollars and cents. Yes, the state of Wyoming is competing with private industry. And I do think the comment is that, yes, the state treasurer can't do all these things, and that's important. But exactly how do you measure that? When you look out there and you realize that your constituents are banking on the, no pun intended, but banking on the fact that banks will be there to help. I've already heard from banks in Buffalo, Pinedale, Jackson, that say this stuff is really killing us because we have to figure out how to be competitive with the investments that they bring. And whether it's, whether it's just CDs or whatever is one thing. We are not in the market of being stockbrokers and everything else. But in some of those areas, we have to adjust everything we do to be competitive because of the Wyoming statutes and because of the federal statutes. So not everything that we do with WildStar 2 and 3 is going to be all perfectly blessed. I have to caution everybody that there is a cost to all of this. And it could be to your very communities that you live in. With that, Mr. Chairman, I'd certainly stand for any questions.
Questions for Scott? Any questions for Scott? Great. Thanks for being here, Scott. Great comments.
Thanks.
Any further public comment? Further public comment? Good morning, Betsy.
Good morning, Mr. Chairman, members of the committee. My name is Betsy Anderson, and I'm the Deputy Chief of Staff and General Counsel for Governor Gordon. Wasn't really planning to testify on this, but to the extent it's helpful, I thought I could just let you know the governor's high-level perspective on this. And I think it kind of derives from back when he was treasurer. I just remind everybody, we went through a very prolonged period of very low interest rate, longer than a decade. And from that perspective, we look at maybe some lost opportunities by local governments who had funds on hand and were getting 1% if they were lucky on fixed income. And so for that reason, I think the governor does feel like it's important that these local governments do have a lot of tools in the toolbox so that when they have to deal with market changes, they have the flexibility to make the changes they need to make. Changes in their revenue, changes in their needs, any type of tools we can give them would be important. So for that reason, he would support giving local governments other options on equity investing. Obviously, there need to be appropriate parameters. State funds have parameters and restrictions and limitations on how they can be invested, depending on the type of investments they are. So we would expect some type of parameters for local governments. Not necessarily the same as what it is for the state, because it's a different situation. But overall, on a high level, this would be something the governor supports. So I'm happy to answer any questions.
Thank you. Questions for Betsy? Thank you, Betsy. Further public comment? Any further public comment? Representative Harshman.
Mr. Chairman, could I have Ms. Johnson, if you could come back up again? Just a quick question on your presentation.
Go ahead, proceed.
Okay, thank you, Mr. Chairman. Ms. Johnson, on your last page of your presentation, your remarks, page 4, about the Casper Citizen Investment Advisory Committee. So I meant to ask you, just can you kind of, it strikes me when I first read it, it's about similar to our investment funds committee at the State Treasurer's Office, but if you could kind of explain that a little more, how many, who it kind of is, those kind of things, the history of it to the committee. Thank you.
Go ahead, Jill.
Mr. Chairman, Representative, Actually, this is part of our financial guidelines that we develop an investment advisory committee. It is a volunteer committee made up of citizens. They are citizens who are very knowledgeable in investing. I have two of them here today if you'd like to meet them. So this investment advisory committee, there is 3 of them who are brokers or people who do investments every day. One of our members is a banker with a local bank, and another one is a retired investment advisor. So they are, again, very knowledgeable in how investments work. I am not an investment advisor or anything like that, so to have their information is very, very important to the city to give us good guidance.
Just,
Follow up.
thanks, Mr. Chairman, just, so is that somewhere in your policy? I mean, how do you kind of pick those folks? Do they apply? Do you go out and seek them, the city manager or the city council? Thanks,
Mr.
Go ahead.
Chairman, Mr. Representative, they were actually appointed by the city council. We did go out, the city manager suggested several different folks, and not all of the people that were suggested were able to serve. So when somebody was not able to serve, they would typically recommend someone else within that knowledge level that would be able to help on our committee.
And final, I just think it's, I mean, I think it's such good policy. That's why I'm trying to drill down on this a little bit. And so you've been working that then for years, this policy. I mean, it's not something recent. You've been doing it for years.
Mr. Chairman, Mr. Representative, the Investment Advisory Committee came into being when I joined the city, which is about 3 years ago.
Okay.
It was something that had been started by my predecessor, but we actually pulled the committee together at that point.
Okay, very good. Thank you, Mr. Chairman.
Representative
Appreciate
Larson.
your testimony. Thank you.
Thank you, Ms. Johnson. My question is, you know, and I appreciate it's volunteer, even our state investment committee is volunteer, but we have parameters on the type of experience, investment experience, and amounts of investment experience that they have before they qualify to be in that advisory position. And I would just, do you have similar criteria just because you work at a bank or because you've invested? Although that qualifies, but it may not be at the level of qualifications for this type of investment. Is that similar with the way Casper approaches it?
Mr. Chairman?
Go ahead.
Mr. Representative, we do not have a documented set of criteria. The people who are recommended are known in the community. I mean, Casper is a small community, so we know the people within the community who are investment knowledgeable. Again, when we first started looking at different people who could serve on this committee, we actually talked to auditors, and we talked to many different people who might have knowledge of somebody that was able to serve, that would have that level of knowledge that we would need for investments.
Mr. Chairman.
Senator Hicks.
Yeah, Mr. Chairman, real quick, Jill, on this same topic now that it's come up. So do any of your current voluntary advisory committee members have any funds from the city of Casper that they're currently involved in the investment of? So that's first part of the question. And second, do you have any policy associated with people that have a direct financial interest sitting on the advisory committee?
Mr. Chairman.
Go ahead.
Mr. Senator, the people who are on our investment advisory committee do not manage any of our investments. It would be a conflict of interest.
So the second question, do you have any policy associated with who can sit on there and then associated with any potential investments for the city?
Mr. Chairman, Mr. Senator, we do have a conflict of interest policy that applies throughout the city, so that would not be something that would be permitted.
All right, thank you.
Representative Harshman.
Mr. Chairman, just final, not that, you know, some of your colleagues around the state, Cheyenne, Sheridan, others have similar citizen advisory committees? Thank you, Mr. Chairman.
Go ahead.
Mr. Chairman, Representative Harshman, I am not aware of what other cities do as far as their investment advisory groups. I apologize.
Okay. Thank you, Jill. Stay close as we may have more questions as this proceeds. Any further public comment? Mr. Sweeney, welcome.
Good morning, Pat Sweeney from Casper. So I was prime sponsor of Amendment A at the urging of our Natrona County Commissioners and the city of Casper. It made sense to me. During the session, we were working with the treasurer's office, directly with Treasurer Meyer, directly with Patrick Fleming, gathering a better way to do it and put it together. The governor's office weighed in while it was on the floor, trying to amend it to make it better, as it did not include previously what he put forth when he was treasurer on investing in equities. Now, 2 years later, still to be working the process after I lost the primary. In October of that year, I contacted Director Obrick, said, shouldn't this go back in front of the body as the constitutional amendment states? And that's part of the process. It was decided, I think, with working with WHAM and the county commissioners, it needed more time to work through what was wanted. So obviously the markets change and different equities change and ebbs and flow of what the market's doing. But I don't know, in looking at the different amendments to what's been done, I'm not sure what the right answer, and listening to some of the comments this morning, hopefully there's a resolution in sight, but maybe it needs more work for your second meeting. And I don't know, but I felt it important after listening to some of the comments being made that maybe some background, a short background of where this came from and the need for it, I totally understood. But I really did appreciate the remarks from the former finance director for one of the school districts. His comments were really good. So I once managed a country club, and I soon realized I wasn't meant for the country club, private country club business, because everybody's an expert bartender and everybody's an executive chef. So, so with that, I just felt maybe some perspective. So, thank you.
Thank you. Any questions for former Representative Sweeney? Any questions? All right. Thanks for being here today, Pat. Any further public comment? Oh. Representative Obermuller? Is there something?
Mr. Chairman, could Mr. Meyer come back up? I wanted to follow up on his comments related to the local bankers.
Certainly. Scott, come forward. Go ahead, Representative Obermuller.
Thank you, Mr. Chairman. Your testimony was really compelling in terms of the broader picture within these communities. And the question I had for you is, in terms of those arguments and where local banks stand, can't those arguments be most effectively made to city councils and county commissioners to explain the broader picture when they're making these kinds of decisions about where banks fit into the broader picture?
Mr. Chairman, Representative Obermuller, that is correct, and banks do that. They sit down with whoever, and often these political subdivisions will, whether they're counties, cities, or school districts, whatever, will call the banks and say, here's what we can get, what can you do to help do this? And so the banks will work with them, whatever they can, to get that rate of return. But sometimes it's just too big of a gap. And so then they're left saying, we can't do that. And when they pull out, like I said, $3 million out of your bank, that affects how much money they can lend over the next year to the small businesses.
Thank you, Mr. Chairman. So within your group, there must be divergence of opinion since you're neutral on this topic as a group, or? So you must see it in a kind of a range of ideas.
Go ahead.
Mr. Chairman, Representative Obermuller, I wouldn't say there's a divergence of opinion. We are just not in the position to be brokers. And so you're talking about private investors and where that money goes. You know, we are not going to be the answer to what these municipalities or counties can do as far as investment. We understand that fiduciary duty is there for them, that they have options. We just want to make sure it's clear that those options do come with costs, and that would be the inability to fund your community businesses. Yep.
Very good. Further questions? All right. Thanks, Scott.
Thank you, sir.
Any more public comment?
Mr. Chairman,
Yeah.
if I may, there was a question earlier about school district investment, and I just wanted to mention that SDO confirmed that they have 1 participant in WildStar 1 and 2 participants in WildStar 2. Thank you.
Thank you for the follow-up. Any other public comment? Okay, seeing none, so that we can have a bill draft or 2 or 3 before us at our next meeting to discuss. Committee, what I'd like to do is start a bill draft based on the county commissioner's option 1, using the Colorado and Kentucky model for allowing the private brick and mortar local business type of a structure. That's the base that I would throw out for this bill draft. And now I'd ask the committee, are there any additions you'd like to add to that base? And the first 2 that I would add is something to have an investment advisory committee would be required, someone to help review this. And then the next one, and this one gets a little more convoluted possibly, but a loss repayment, but something stating that they couldn't spend any of the returns. If there's a loss incurred, then they wouldn't be able to spend any returns until the corpus is returned to its full value, something to that effect. And so this, again, this is a base for a conceptual draft bill, so hoping you guys will add to it. Representative Larson, what would you like to see?
Thank you, Mr. Chairman. I would like to respectfully request that on this advisory committee that we consider some experience or guidelines, criteria on the type of experience these people have to be on that advisory committee.
Okay, so we'll include that, some guidelines. And again, there'll probably be lots of blanks in this bill that we'll have to answer at the next committee meeting and whatnot. So we just have to have a starting point, and this is our starting point. Senator Steinmetz.
Thank you, Mr. Chairman. I would like to consider if we are allowing school districts to put savings in and investments, that it is a requirement that they not be engaged in a lawsuit against the state for lack of funding.
Okay.
Mr. Chairman,
Representative Harshman?
maybe some part in there about a limitation on the amount of fees, some cap on the fees that local government pay private investors.
Okay.
Whatever that is, we can talk about inside later.
Yep.
But thank you.
And included in that Kentucky and Colorado model is already going to be some percentage of the total amount that's allowed to be invested, and we'll insert whatever's in those two, and then we can arm wrestle over what we want the Wyoming version to look like, but we'll at least note that that's something of question in a staff comment. Representative Larson, and I'll get to you, Senator Hicks.
Thank you, Mr. Chairman. And similarly, along that conversation is the investment manager. What percentage of the local fees are of their total portfolio? As we look at the state's funds, there's like 10% of the total portfolio, and vice versa, that what percentage of the funds I think we've got that broke down already with Amendment A, what percentage of the funds the municipality or what can put in, but.
Okay. Yep, sounds good.
Mr. Chairman,
Staff's getting those notes. Thank you very much. Senator Hicks.
I got a long list.
Okay, good.
But first, I think we probably need to, there's got to be some auditing associated annual reports. And within that annual report that they need to provide, should provide rate of return, investment, cost of investments, duration of their investments, the diversification of the portfolio, where are they? I mean, no different than we do with a lot of the states. I think there has to be an annual report that shows, how much you're spending on the investments, what's your rate of return on investments, what are those investments,
Okay.
asset allocation.
And you want that report to the state treasurer, to this?
I think
to
it needs
who?
to report back to somebody that might actually be able to review it and and so that may be the state treasurer's office as a placeholder at some point in time. And I think we ought to also talk about duration of investments. That's something that was brought up a number of times. So I think at the bare minimum, if this is really going to achieve what we hope, is it needs to be a minimum of 5 years of investment horizon. Then I think we need to have policy in there associated.
Senator Hicks, I think if we talk duration, that's going to be on the next bill we're going to talk about, which is a pooled fund bill.
Yeah, I'm talking about this bill
Okay,
specifically.
okay.
So investment horizon. So how long can they put something in? I think we heard this back, is you can't put it in 2 years and take it out a year later. So we need to understand that there has to be a minimum investment period associated with that. And then I lost my train of thought on the other one.
Sorry, I interrupted.
Yeah, I'll get back to that.
Very good. Any more ideas on this potential bill draft? Okay. The next bill draft, I think I'd like to see started, and again, I'm just going to put out as a base and hope we have some additions to it, is to the county commissioner's option 2, allowing for pools, and I think the structure of that pool would be based on our local government liability pool structure. So that would be the base warehouse, you might say, or organizing body that would be based on that kind of a structure. And then using the sideboards that they list here, most of those sideboards were brought up by both the municipalities and the county commissioners. So that would be the starting point, and then I would ask the committee the same question, or make the same request to see what additions you would like to have to that bill beyond what's here. And again, these are just starting points. We may not approve them in the end, but at least we have a bill draft before us at the next meeting to be able to discuss something and amend. Anything anyone would like to add to that base? And really that covers, with the passage of Senate File 90 last year, this would give us three options that a local government could utilize. They could utilize the private sector person, they could utilize a pool version, and they could utilize the WildStar 3 program, for lack of a better option or description. Staff, do you have any comments or concerns with what we've tasked you with at this point?
Yeah, Mr. Chairman, no concerns, just I guess a heads up that I anticipate that the committee will have many, many decision points for each draft to work through.
Absolutely, and we recognize that, and that's really the goal here, is to start somewhere and then make some of those refining decisions in the future. So Senator Hicks, you're back on the
Mr. Chairman,
tracks.
I just wonder if maybe we ought to also look at potential of setting up, so allowing these local governments to set up let's call it a permanent inviolate or an endowment fund. I think we've heard reference that they've done these for a couple of places like Powell, and then look at that. If they want to sock money away permanently and then that's invested with this thing and they spend the interest off of it, is that something that we would want to look at too? There may be some interest in that. I don't know. But
I think that's a good idea. If we could do a little research on what options are out there, what restrictions against that are there currently, and then what it might look like. And so I think that's a great idea, Senator. Our fine LSO staff will bring us some ideas and reports for our next meeting. Anything else? So now those are my two base ideas for bills, but I'd like to hear if the committee has any other base ideas or bill draft ideas on this topic that they would like to see moved forward or requested at this point. Okay, everyone's pretty quiet up here. That's a good thing. So we'll start with those. If something comes up, committee, just shoot an email to myself and I'll pass it on to our staff and we'll do great work from there. We are slightly, any other comments on topic number 1, local government funds, investments, and equities? Municipalities and county commissioners, you heard our direction where we're going. Any questions or concerns with the direction we're at least starting anyhow? Okay, I see thumbs up liking that. I see the treasurer's office has arrived. Anything the treasurer's office would like to add before we close this topic? I know you're here for other things later in the day, but putting you on the hot seat while you're here if there is anything. Seeing a shaking of the head, so I'll take that as a no. Since we are a few minutes ahead of schedule, let's take about a 10-minute break and we will try and get started a few minutes before 11, maybe 10 minutes to 11 with our next topic, which is investment performance report. So thanks, and we'll be on break until 10:50. We'll go ahead and call the meeting back to order. All right, we'll get started again here. Our 11 o'clock item number 3 on the agenda, investment performance report. And we'll start with the Treasurer's Office, I do believe. Not sure who with the Treasurer. We're going to start with the Treasurer's Office on the investment performance report. Patrick, Don, Treasurer Meyer, whoever'd like to start, we'll get rolling.
Thank you, Mr. Chairman. Patrick Fleming, CIO for Treasurer's Office. And Josh Keevan, our consultant, is online, I believe, and he will run us through the performance report.
Very good. Josh, there you are. I see you. Welcome today, Josh. And please proceed.
Thank you, Mr. Chairman, members of the committee. Josh Keevan, Senior Consultant with RBK. I believe you have a preliminary version of our April 30th performance update in your meeting packet. And I will start on page 3 of that document, which just shows a pie chart and values associated with the various funds that we are reporting on today. Total value of these funds at the end of April stood at just over $28.6 billion in total. And in the pie chart, we've used some color coding to indicate different types of funds. The green shaded funds are what have historically been known as the longer term total rate of return focused permanent funds, the largest of which is the Permanent Mineral Trust Funds. Trust fund. These are the permanent funds that have historically had the most equity exposure and highest degree of risk and return seeking. In blue, you have what's historically been known as the income focused permanent funds, the largest of which is the Common School Permanent Land Fund. These are permanent funds, but they've historically been required to provide higher degrees of income. So there's been more of a focus on income in their asset allocation relative to the Permanent Mineral Trust Fund, for example. With the move that the legislature has made recently towards larger reserve funds that could support a higher degree of risk-taking and less of an income focus for these funds, the IFC and the SLIB have approved a convergence of the green and the blue funds here, both towards a higher return seeking, higher risk profile. And so over time, we would expect, we're keeping them separate still because we're quite a ways from actually getting to the target allocations. But over time, you should expect these to converge together. In yellow, you have the Workers' Compensation Fund at just under $2.5 billion. You've got Pool A at just over $420 million, LISRA at just over $1.5 billion, and the state agency pool at just over $6.9 billion. Keep in mind, as we move into the next page where we'll show performance for all of these, the total fund, consolidation of all of these different funds is mixing together different pools that have very different purposes, very different risk profiles. So the level of performance for the total fund, we would caution, doesn't mean a whole lot in and of itself. What does matter here, though, from our perspective, is the performance relative to the total fund benchmark. And this is on page 4 at the top. You've got the total fund, which is the roll-up of the performance of all of those funds, against the total fund index, which is a roll-up of all of the underlying policy benchmarks for those funds. The performance is net of fees. So the difference there is the net of fees value added against those benchmarks. And you can see in total, Across all periods, there has been positive outperformance net of fees. And over the current fiscal year to date, you've seen a 6.3% return, which is about 130 basis points ahead of that total fund index. And that, as you know, we are getting pretty close to the end of the current fiscal year, and actually just a couple weeks away as we sit here today. But when we go back to these numbers at the end of April, 2 months still to go. But May has been a generally pretty good month, as is June so far. You can see below this on this page the performance of each asset class. Each set of lines here represents an asset class that's specifically defined in the investment policy for these funds. And you see the performance of the asset class as the dark green line on top for each category, and the performance for the policy benchmark, which is the lighter green line directly below that. Now you're not outperforming in every single asset class, but if you look at these, you will see a majority of the categories showing good relative performance this year. And obviously when you roll those all up to the total fund, that's where you're seeing the 130 basis points of net alpha. You can also see, just looking at the absolute return on the chart, kind of the experience, what's driven the experience so far in this current fiscal year. The best performer actually in your portfolio has been the MLP space. So the midstream energy exposure that you have has continued to be a really strong diversifier in your portfolios. Thrilled to see that. Of course, we want to be careful not to have too much exposure to that space because of the correlation with the state's economy, but as a small diversifier, that's been quite valuable over the past few years. Outside of that, in the sort of more traditional equity markets above that, you see pretty strong performance across the board, with the best absolute performance coming from the US equity markets, a lot of that dominated by the large cap tech stocks that you've probably been hearing referred to as the Magnificent Seven. Below that, as you get into some of the alternatives, some of these numbers won't actually reflect completely up-to-date valuations quite yet at this point. So we'll continue to update these numbers as those come in. One of the weaker spots in the market has been private real estate. Weakness has been particularly concentrated in the commercial office sector, with office trends being very challenging with the post-COVID dynamic and work from home that exists in so many areas. The index has been down almost 9.4%. You can see that both in core and non-core real estate, your real estate investments have been well positioned to be down, but not down quite as much. And then as you move into fixed income, you see pretty flat performance fiscal year to date for core bonds. Your portfolio has outperformed the ag by about 63 basis points there. The best performance has come from floating rate bank loans because of the floating rate nature. As yields have gone up and as credit spreads have tightened, that's continued to perform quite well. The weakest performer in fixed income has been the long duration bonds, and those are currently only utilized within the workers' comp fund, specifically as a hedge against the liabilities. So that's actually, even though that's a negative number for the balance sheet of the workers' comp fund, that's actually a neutral outcome, and that the present value of the liabilities should also be adjusted down by approximately the same amount. If you move to page 7, here we get into the breakout of the performance of each of the individual funds versus the policy index. And I'll just focus on the fiscal year to date numbers and go down these pretty quickly. But Permanent Mineral Trust Fund through April is up about 8%. The market is up quite a bit from April 30th levels. So barring a big change in the markets over the last couple of weeks here, you should expect to see pretty solid double-digit gains from these funds. The income-focused funds as represented by the Common School Fund. As noted previously, the allocation is not quite at the same risk level as the Permanent Mineral Trust Fund, even though it's moving in that direction. So performance is close, but a little bit behind that at 7.7%. In both cases, though, here you're actually seeing close to 2% net outperformance against the policy benchmark. Workers' compensation, because it does have a sizable portion of its assets, offsetting the liabilities and those longer duration bond portfolios, the total performance is quite a bit lower than the other funds at a positive 2%. And you can see we actually subdivide the workers' comp into two underlying portfolios. It does have its own longer term portfolio, which is up almost 8%. But the liability hedging portion of it is down about 2.5%. The positive 2 on the total fund relative to the minus 2.5 for the liability hedging portfolio does give you a sense that you should expect the balance sheet to improve by the difference between those two. So having some of that diversification has actually been a positive for the balance sheet of this fund. LISRA on page 8, you've got the LISRA total fund, which was up 5.7% so far fiscal year to date. And LISRA currently is subdivided into 3 underlying buckets. Starting at the bottom, the short-term reserve, which is just high quality, short duration fixed income. That's up about 3.5%. The intermediate term reserve, which is intermediate term fixed income and has seen more price weakness as rates have gone up over this period, is positive, but just barely so. And the primary driver of returns has been the portion that's in the long-term reserve, which is actually up about 13.5% fiscal year to date. In the asset allocation process this year, which we've worked through with the IFC and the SLIB, we did recommend consolidating from a policy perspective the long-term reserve and the intermediate term reserve into a single portfolio and actually consolidating that with the asset allocation of Pool A. So the LISRA going forward would have essentially 2 line items: a longer term reserve, which would be similar to the risk profile of the combination of what's currently called long-term and intermediate term. And this is an opportunity from our perspective to really kind of streamline and simplify the operation of the investment portfolio and the investment policy, as if you look at the risk profile of those 2 combined buckets from LISRA, they're actually quite similar to how Pool A is structured from a risk profile standpoint. That Pool A risk profile standpoint is also consistent with what we are recommending for the investment of the permanent fund reserves, which today sit only in the state agency pool, which is, as you know, a laddered portfolio of treasury bonds. So very safe, very risk averse, but probably underinvested in creating a long-term drag on the performance of the permanent funds. And as you've increased the size of those reserves, we actually are expecting those to migrate up into the Pool A asset allocation, which will be roughly 50% equities, 50% fixed income, but with a focus on liquid securities. If you go to page 9, here we track rolling 3-year standard deviation. Standard deviation is a measure of the volatility of the performance results. And this is important from a legislative perspective because in Wyoming statutes, one of the ways that you've managed risk for these funds is to set a maximum risk level that should not exceed the volatility of a portfolio that is 70% global equities, 30% fixed income. That benchmark is the dark purple line. And you can see here over all rolling periods of time, the permanent funds have stayed below that level. And then lastly, I will touch on page 11, which is just looking at over all of these same rolling 3-year periods from left to right, the Sharpe ratio of the Permanent Mineral Trust Fund and the Common School Permanent Land Fund, which are the green and blue lines respectively, versus that 70-30 reference portfolio benchmark. And Sharpe ratio, as you likely know, is a measure of risk-adjusted returns. It's essentially the return generated above the risk-free rate or the cash rate divided by the volatility of the return stream. And one of the primary objectives and policy for the State Treasurer's Office is to optimize risk-adjusted returns. And you see a very high degree of consistency of this relative to this particular benchmark over time. And also true on the far right-hand side, particularly in recent markets. So, Mr. Chairman, members of the committee, those are my prepared comments on the performance update. I will stand for any questions that you have.
Very good. Any questions for Josh? Senator DeGroot, did I see you raise your hand? Okay, sorry. Any questions for Josh? Thank you for the presentation, Josh. Patrick, turn it back over to you.
Thank you, Mr. Chairman. Yes, one comment I do want to make is if you could turn to page 7. One thing I want to point out, and I think this is something to just really celebrate of what we've done. When I say we, I'm talking about the legislative body, both then Treasurer Gordon, now Treasurer Meyer, and our staff and so forth, in looking at the alpha production, because that's really what we're focusing on. Because if we just had this benchmark, what would the return be versus where we are now? And if you go back, I'll just point out the two funds that we've been really looking at, the two largest permanent funds, which would be the Permanent Mineral Trust Fund and Common School. If you look at 10 years ago, we had 50 basis points, 0.5 in alpha. And at that time, I was one person managing 19 billion. And now we have 10 people managing almost 30 billion. And if you look every year, 0.5, 1, 1.4, and 2.7 right now, we'll see what happens when we end at the year. Or Common School, 0.4, 0.9, 1, 2. With the changes that we've done and the bills and legislation that you've passed, you've been able to give us more people. And I think there's a direct correlation to the number of people. I mean, you couldn't go to 100 people, but there's something about the amount of people growing and what we're able to produce. But if, putting it into dollar terms, if the PMTF is 1.1, that's, we're talking about 1.11 billion, $1.1 million per basis point. And if we're doing, 2.7, that's almost 300 million additional alpha that we're producing. And that's significant. That's the stuff that we're running the state on. And so I just want to say, one, what Treasurer Meyer has done, having an IFC is extremely important. And what you have all done for us, I just think it's quite an accomplishment. And I want to just say thank you, but pointing it out, what we're really doing it has a big impact and matters to the people in the state of Wyoming. I just wanted to point that out because it's a significant amount of money. Thank you.
Questions for Patrick? Senator Hicks.
Yeah, Mr. Chairman, Patrick, and it's just a question, and I think, but where are we profiling the reserve accounts for the Permanent Mineral Trust Fund, getting back to, given the opportunity for the higher return? Are those just invested with the current asset allocation, the same as Pool A, and we're profiling those returns and within Pool A, or where is that at?
Mr. Chairman, Senator Hicks. Yes, so if you remember, for everyone else who's not involved in it, we're taking the reserve accounts, which were a fraction of it was about a 1.5 year spend, and all of you allocated into that, so we could take that and put it into it. So I think all of the transfers have been done except Common School. And once those are done, then we're going to be able to transfer those from the state agency pool, where they're housed right now, into what we call the total rate of return liquid bucket. So all of those things that we've done to try and enhance our yields, we're going to have two main investment vehicles, kind of this quasi-endowment model, if you will. So one will be the total rate of return illiquid, if you want. That's where the PMTF and just the same allocation that we have there with hedge funds, private equity, things that are illiquid. But for something like a reserve account where you actually need to invest, that would be into the total rate of return illiquid. And really what it is very similar to Pool A. It's 50% equities and 50% bonds. So that will be invested next year once we get the transfers over, once we're at a 5-time spend, which we're approximately at. And we will do that shortly into the coming fiscal year.
So going forward, it'll show up on this profile, those reserve accounts, correct?
Yes, we will have a,
Mineral Trust Fund reserve account, the 5X, and then the Common School Permanent Land Fund. That will be profiled separately, just like we've done for all the other accounts here. Is that correct? Is what we'll see going forward?
Mr. Chairman, Senator, yes, we will have a different line item for that, which will not only be, they'll have other things into it as well, not only the reserve accounts, some of the Pool A accounts, et cetera, so that this will be the one area that where funds might be needed in a short order, all of them will be in that bucket, and you will see that.
Further questions? Representative Larson.
Thank you, Mr. Chairman. And so, Patrick, going back to that illustration you used 10 years ago when it was just kind of you handling the load versus where we're at, and we've provided some additional help to get you there. The debate back and forth between the Treasurer's Office and this committee and the Appropriations Committee is the additional staff. And we push back and forth with each other on that. And so you show us here the return on the investment of those people. And so the concern that we've always expressed is how much extra staff do you need? And now you're saying, yes, but look at the return that this extra staff has provided. What percentage of that extra revenue has it cost the state for those additional people? So am I making sense? So how much did we invest in the human capital to get this investment back to the permanent funds?
Mr. Chairman, Representative. Yes, and Don has those figures, and we're going to go over that when we go through to looking for these positions. But when you look at it, just on these two funds alone, so we're talking 1.1 a basis point on 2.7, that's 292. Common School is about 500. On 2, that's another 100 million. So you're basically 400 million, 390 million additional alpha dollars, other than, minus those others for, I don't know, it's less than 3 million. I don't even know what it is by far. If I could invest in that difference, you would have every multi-billionaire out there wanting to invest in that. That is the best return on your investment that I think, that you could look at. And it's not only true, what Sam and Dave have done, it's the same thing. It is there's nothing out there that could even come close to comparing to that return on investment. And it's just, and we've, as you know, we don't ask for something that we don't need. And that's really what we're going to be bringing up. It's just something that, we really need some of these positions, and it would be helpful if we could get them. And hopefully the alpha production will continue to increase.
Representative Harshman.
Mr. Chairman, and just to add to that, we've also had a pretty significant fee savings as well by doing this in-house. Comment on that, please.
Go ahead.
Yes, Mr. Chairman, Representative Harshman, that's a great point. So, all of the things that we've done, looking at the employees that we've brought in, all of you, and I know you were very instrumental in moving these reserve accounts into an actual interest-bearing account. We're going to save money there. We've gone through that money. Taking Common School out of an income focus and putting it into a total return, that is, we're talking in the tunes of hundreds of millions of dollars annually. Historically, that's what we're looking at. But then the fee savings, we're up to, I know in Polly's numbers, she has 30% of internal investments. I'm not sure if she included, did you include Grosvenor C on that one? Yeah, so that would be another 3, so just say a third. A third of our investments are managed internally. So as you know, we've started to do the equity investments internally. And, so far, so good on that one. But yeah, that is not only adding alpha to our numbers, but it is also reducing those external fees, which, at one point, we were saving over 70 million or something in fees. It was, significant. So, we've talked about investing in Wyoming. I mean, that is what we're doing through your help and through the treasurer's guidance. We're investing in the people of Wyoming. We have, at WRS, they're doing the same thing that we're doing, and we have, what I would argue, one of the numbers will prove it. What we've done on the looking at other sovereign funds and what Sam and Dave have done versus other pension funds and so forth, it's significant. There's not very few institutions out there that have been able to do what all of us have done. Because without your help, without Treasurer's guidance, without the IFC's guidance, it wouldn't have happened. I just think it's significant, and I don't think we hear so much about, you read the papers, and I don't think people celebrate what we have done and how much money we're bringing to the state. It's significant, especially when we're losing 50 million a year in coal. Anyway, I'll get off my soapbox.
Well, Mr. Chairman, yeah, thanks. So the plus 400 million, and then savings of 50 plus million a year in fees. It's a lot. I mean, just trying to figure a total for really a $3 million investment in people in-house. Just to summarize.
Mr. Chairman, Representative, and throw in the change in what we've done with Common School and the reserve accounts, that increased income that we're going to be achieving on those over time.
That's going to be the next level. Yeah.
Yeah, so that we've really changed this thing around from this sleepy little fund 10 years ago to what, we've all been able to accomplish over the last 10 years. I just think it's,
well, not
very
to say,
positive.
Mr. Chairman, and you mentioned everybody else, patted all of us on the back, and we certainly pat you on the back too. So appreciate all your good work and hours of work on this. So thank you.
Oh, thank you.
Yeah.
Well stated, Representative Harshman, well stated. Other further questions for Patrick? Treasurer Meyer, anything you'd like to offer before we move on to the retirement system?
Yeah, just one thing, it's not really part of this topic, but this is a good place to look at it. As you look at each one of these funds, what I get is people saying, well, we're just going to take 30 billion that the treasurer has and we're going to pay all our taxes with it, and we want to pay taxes again. But you really look at it and you drill down into each one of these things, there's either a constitutional provision about where the money goes, so you'd have to change the Constitution, or you'd have a lot of like the SAP. Essentially, it's over 400 different agencies and boards that essentially it's their checking account, or where you guys do a project like a building or something like that, and you put the money in there. That's your savings account. So I try to tell people it's not a grab bag, but that's I think we're going to have a concerted effort between the legislature and the treasurer's office about trying to get a good educational piece that people actually understand that we're all on the same page, because essentially the tax better than I do that's coming forward in different areas. But we have to, I think, have to be clear about what this money is, and it just isn't out there for everybody to have a $17,000 check and go about their business and then not have any income for the things that you guys are you're actually governing. And other people, I would say, that are just basically trying to find the loudest megaphone and trying to buy votes with Wyoming's future. And I think I'm saying that as kindly as I can. But yeah, I think we can work on this. I think we're on the same page, but we'll try to get some things out there that actually gets into some of the details, but doesn't bog people down. So you guys have a clear message about that, you know, where the money's doing and what good you guys are doing with it.
Very
Thank
good.
you for your
Thank
time,
those
Mr.
comments.
Chairman.
Senator Guru.
Thank you, Mr. Chairman, and I'll belabor this, but I too want to kind of say to the treasurer and to Patrick, thank you so much. You guys have done just incredible work, and I agree 100% with the good treasurer on this one, that this is a great story, and we're about to cross that $30 billion threshold here, probably within the next, well, I know we're not supposed to guess such things, but fairly soon. And I agree that we need to get this story out because it's, you know, as it crosses that threshold, by my calculations, it's going to be close to 30% of money going into our general fund is going to be from interest income. And while we've had years and boom cycles where the percentage off the permanent mineral trust fund and all the revenue that we've gotten from our energy friends has exceeded that, it's never been from interest income. And this at a time when everything is so volatile and all the constraints and all the things that we know are challenges out there in that, especially in that energy space right now, from external forces. The fact that we can count on that and we're getting to a point where it's starting to grow exponentially on itself can't be dismissed. And so we really do need to get that story out. And I stand ready, Mr. Treasurer, to do anything we can to help you get that message out and you know, just let us know your thoughts on that. I really appreciate it. Thank you.
Guess one thing, Mr. Chairman, if you're.
Go ahead, Mr. Treasurer.
Is that, you know, it's not all investments. We do get that severance tax distribution back into a lot of these different funds, but that is shrinking. The amount of money, you know, we'll have an analysis on that when we get a little more time to do some in-depth analysis, but that is shrinking, the amount that actually goes back into there. So we're more and more reliant upon the investments and how their investment are and how they're invested. And to the point that Patrick made, the flexibility that you guys have given us to start moving the common school permanent land fund into the total return is going to make a huge amount of difference. And yeah, we're moving the right way, but I guess I see a lot of bumps in the road. And let's hope that they're only bumps. But yeah, those things are going down. So we're getting hit on a lot of different areas. And I think that we're going to weather ourselves through here, but we just got to, you know, think about people who are actually trying to govern.
Very good. Thank you. Any Representative Harshman?
Thank you, Mr. Chairman. And I just want to echo the good treasurer. I really appreciate your comments. And I think you're 100% right on. And I think the problem is the problem is this is a factual story, what we've just heard. The other stories out there, they're not based on fact. They're just stories. I mean, I've heard the same stuff, using the Wolf's accounting system, all the accounts and all this stuff. I mean, general accounting to slam folks who are working to do this, you know, and I think, but more of this story, you know, there's always this tension of, do we use today's funds for today's people, today's babies and elderly and school children, or do we use it for the future? And really we spend, you know, these are generally mineral funds. It's off the Permanent Mineral Trust Fund, Governor Hathaway and our predecessors who sat in our seats in the House and the Senate. But, you know, we spend about 85% of the mineral taxes every year on today's people. So we're saving about, even with our increased levels of saving the last few years, we only save about 15% of it. So I think that's part of the story as well. I think another part of the story is, I think we recently passed Alaska highest returns, investment returns per capita. I mean, it's really something to be celebrated. It's going to be our permanent guarantee against some kind of state income tax or tax increases. And then I think part of this story too, and I just appreciate, you remember the 4x10 days you were serving. I think you and I were the only two serving in the legislature that are sitting here today. But And that was all about getting that extra statutory 1% and how to sell that, you know, and we were at 2 billion in the permanent mineral trust fund back then, but it was like 2004, in 6 years, let's get to 4 billion, double it. And people were like, oh, it'll never happen, can't happen. And then we hit 4 by 10, and then it was 8 by 18. You know, how can we get there? And I think part of this, as leaders in this area, this committee, along with you as treasurer and chief investment officer, we've got to, I think, have another, and I've been talking to our staff about this over the months, you know, is it 30 by, or is it 35 by 30? But I think this part of taking just a small part of our mineral extraction and saving for our future needs and our future people long after we're gone, that used to be a conservative principle. I think it still is. And I think we gotta, as leaders in this state, our people have elected us to keep spreading that word and telling the story based on facts, not all this other crap out there. So I really appreciate your leadership this morning and bringing that forth to our committee, the people of the state. It's just so important and such a celebration. And I'll get off my soapbox on that, but it's so good. I was so grateful to hear you say that. So thank you, Mr. Chairman.
Thank you, Representative Harshman. Anything further for Senator Hicks?
Yeah, Mr. Chairman, and I guess I would concur with those last comments, but one of the things that I think would help us make better decisions going forward, and I think you just talked about it, Treasurer, the simple fact is that 15% that Representative Harshman is declining. And what we need to know is the rate of decline, this committee in particular, because we need to offset that. And so once we know what that rate of decline is, that mineral wealth that we're serving, then we need to kind of take a broader view, because this is going to become a more important component of being able to stave off future tax increases and fund government at an appropriate level. And so the quicker we could get those numbers, where I'd like to see what that rate of decline is over the last 2 decades, say go back to 2000, we're going to see a ramp up, obviously, and then a decline. But I think based on everything we get from budget and fiscal, and you look at Craig, we know our mineral severance taxes, now who knows what rare earth is going to do, but it's not going to replace oil and natural gas. I think we just need to be realistic on this future stuff. But I think that gets back to the policy decisions this committee needs to make as a recommendation back to the legislature. How are we going to adjust this moving forward so we don't hit these bumps? And then how do the bumps navigate the black swans when we do have those? So I'd be very curious as to look at that, Mr. Chairman, and maybe come back with some potential ideas and recommendations. I like Representative Harshman has been contemplating this quite a bit, especially in light of some of the initiatives to look at property tax reduction. And I'm reminded of what Patrick said at one of our meetings that we had in the Senate is you can't move forward. I think it was our budget and fiscal people based on these declining mineral revenues. You can't do property tax relief, continue to build schools at the way and provide ECAs going forward, because the money's just not going to be there, because property taxes have offset all of those decline in minerals that go into the school foundation program. So we need to take some serious look at this decline in mineral revenues and see how we offset these to maintain this current rate of increase. I think the 30 by 35 is a great idea, but we need to have a plan. But we need to understand what's going to drive it. So how long would it take? The question, Mr. Chairman, how long would it take to look at that, to put to those, and this may be something that even our budget fiscal and Craig group can put together, is just look at putting that information. This is our annual federal mineral and severance taxes combined, the FMRs and the severance taxes, and look at that over the last 20, 24 years.
Okay, go ahead, Polly. Very good. Staff's made a note of that. She wasn't on the microphone, but staff's made a note, and they will get that research back to the committee. Senator Steinmetz.
Thank you, Mr. Chairman. And on that note as well, I think we have to then take a look at correlation of spending and our budgets as well, because it's not, that's only half the picture. And so we have to really talk about spending when we're talking about what our revenue picture looks like, because that's really how we manage the state. And so, and prioritize how we spend our funds. And so we don't want you guys working hard for us to just not look at both sides of the coin. Thank you.
Well, Mr. Chairman,
all right.
definitely needs a balance in
Yes.
in what comes in and comes out. We can make more, but yeah, I mean, we have to understand what the needs are, and we have a lot of different use cases at different returns, that the different problems that we can see. And, like in 40 years, you're gonna have to replace all of the school buildings.
Yes, well, we're getting off our topic of the investment performance
Okay,
here
yeah.
quite a ways. So I think unless there's further questions for Patrick and Treasurer Meyer, we'll move on to the retirement system and their report on the investment performance. I know it. Mr. Swindell or whomever is going to lead the way, take it away.
Mr. Chairman, Representative Walters, members of the committee, I will take the lead on it. I'm David Swindell. I'm the Executive Director of the Wyoming Retirement System. I want to make a few introductory remarks and just to remind the committee and folks that may be listening kind of what we're talking about here as we talk about our investment performance. The Wyoming Retirement System administers 8 defined benefit pension plans for the state. We have almost all the public employees in the state, K through 12 education being our largest component. We have $11 billion under management that's separate from Treasury, which you just heard about. We have 36,000 pensioners in the system and 41,000 active employees. Last year, we paid more than $800 million in benefits, and 79% of that money stayed in Wyoming. I had the privilege last night to visit with the City Council of the City of Casper to give them an information update. A couple of things I pointed out to them that I would like to point out to you. First of all, that $800 million that we paid last year, $77 million of it went to Natrona County. And I know I have some people here that are from Natrona County, and Natrona County is important to the whole state. All these numbers are pretty significant in terms of total wages in the community, total income in the community. You can go back to the census reports. In places like Fremont County and Hot Springs County that are more rural, you're talking 3 to 4% of county income. A little less here. Natrona County has a little more total income, but still you're looking at 2 to 3%. So the financial impact on the state and on our communities is significant, and retirees will spend their money. This money is going to go to the Cowboy Cafe in Du Bois. So I want to make that point. The system is important financially to the state. It is important for recruiting and retention. In a recent state A&I survey, retirement benefits were the #1 reason that people chose to work for the state of Wyoming and why they decided to keep working for the state of Wyoming. The #1 reason for recruiting and retention. I was speaking to a police officer last night outside the city council chambers, and he said that the pension was the most important thing for recruiting new police officers, and they're having some issues with doing that in Casper. The police department is short. But if it wasn't for the pension, it would be a lot worse. The system is healthy and sustainable with the efforts of the members of the legislature and the governor's office. I think I'd like to extend my appreciation for all the support that we've had. And in the end, in any pension system, of that $800 million to the state, $77 million in Natrona County, 2/3 of that, 2/3 of it came from Wall Street, came from investment earnings. And that's why the investment function of a pension system is so important, and that's what we're going to give you an update on here today, and that's why we're going to do it. Before I do that, I want to thank some people that are in the audience here for all the support we had in the last legislative session to adjust contribution rates, to adopt actuarially determined contribution rates in the public employee plan, and to give us a boost in our administrative expenses and headcount. most of which will go to support the investment team. And one more investment accountant and 2 support staff to provide the first middle and back office staff that Sam has had a chance to work with. Representative Walters, I want to personally thank you, as well as your absent co-chair, Senator Nethercott, on the Senate side, because you carried that House Bill 83 on the floor in your respective chambers. And I want to appreciate everybody who supported those bills. The other thing I'd like to point out is some of the members of the Legislative Services Office's staff that were instrumental. Don Richards, I think, was instrumental in working some of those bills, especially a couple people that are in the audience today. Polly Scott, thank you. Brian Fuller, thank you. I think all of that has been really important. I also want to thank the support of the board. Our board, I work for an 11-person board that includes the elected state treasurer. So Treasurer Meyer, thank you. It also includes 10 people that are appointed by the governor, one of which is to my left, to your right. Eric Nelson is the city attorney for the city of Casper. He served on the board since 2015. He serves as the vice chair of the board and also chairs the investment committee. And so I want to thank everybody for their support. And so with that, I'm going to turn it over to Sam Massoudi, who's going to give you a brief rundown, explain why we earned 14.26% in the 12 months ending 31 March. And then we'll turn it over to Mika Malone from Makita Investments, who is the board's independent investment consultant that advises the board on these affairs. And she's going to give you some additional flavor on where that all came from and what the attribution is, what worked, what didn't. Was it asset allocation? Did the team's talent have anything to do with this, and so on? And I will tell you, of course, they did. So Eric, first of all, I want to turn it over to you for remarks from the board's perspective.
Go ahead, Eric.
Thank you, Dave. Mr. Chairman, members of the committee, there's really not much more that I can add that Director Swindell didn't already say. From the board perspective, we'd certainly like to thank all of you for the support that the legislature has shown for the retirement system. It's been an honor and a privilege to be part of this board, to work with the staff, to work with, I think, one of the most talented boards that I've ever been a part of. And we are very dedicated, and we continue to look forward to the future, to continue to strengthen and support the pension system. I am an appointee representing local governments. I can tell you in talking to our staff at the city of Casper and Trumbull County, the pension benefit is absolutely crucial to our recruitment and retention of key positions, our firemen, our police officers. And when I see what they have to endure every day on the job and the risks that they take protecting our community and our citizens, to know that in some small way I can contribute to their future and being able to retire and be secure in retirement is very, very gratifying. So I won't belabor the point, but thank you very much for all of your support, and we continue to look forward to working with the legislature in the future.
Thank you, Eric. Sam, on to you.
All right. Thank you, Mr. Chairman. So Sam Massoudi, CIO of Wyoming Retirement System. Turning to page 2, I'll just go over a few numbers quickly. These are all pulled from Makita's performance report, but I thought a little summary would be helpful. If you look at the third line, that shows our relative performance. And as you can see, for all multi-year periods, we're beating benchmark. I'll point out the 5-year return, 9.67%, beating our benchmark by 1.67%. So that's the equivalent of about $800 million of outperformance over that time. Going to the next line, you can see the percentile ranking. And so our primary measure of our performance is relative to our benchmark, because that's our custom asset allocation. But it's always good as a secondary check to look at our performance relative to peers. So if you look at the 3, 5, and 7 years, which are good intermediate to long-term periods, we're in the top 5 percentile of our peer group. And even in the 10-year return, we're 19th percentile. So I think that reflects hard work on behalf of the legislature and the board and Dave and the investment team. Looking at our benchmark, we show the peer ranking there too. So over the 5 years, even our benchmark is ranked 41st percentile. So it's not an easy benchmark to beat. Over 3 years, it's 22nd percentile, so in top quartile. If our performance was the same as our average peer, our peer median, we would have returned roughly $1 billion less. So I think that's a good point of reference. So that's it for summary statistics. And unless there are any questions, I'll turn it over to Mika Malone, and she can run you through some of the attribution and the detail.
Senator Hicks.
Sam, just real quick, I'm assuming when it says annualized performance, that's across all of the counts.
Correct. So
Big account, firemen, law enforcement, judges.
That's correct. Yeah. So it's one return for all of them.
And so if just to follow up on that, are all of those under the same asset allocation?
Correct.
So they're going to perform the same?
Correct. So Fire A had a separate asset allocation, as you might remember, for about a year, but yeah, now they're all the same.
Okay, thank you.
Yeah, Mr. Chairman, Senator Hicks, the way we operate it is that we begin the month, and let's say you're the law enforcement plan, you have 7% of the assets. And at the end of the month, you're going to get 7% of the gain or investment loss. There's money coming in for contributions to law enforcement. There's pensions going out to law enforcement. There might be an administrative expense that's specific to law enforcement, but generally it's allocated according to proportion of assets too. And we handle that the same way in an investment gain loss, and that's how we allocate all this across all the 8 different pension plans that we have.
Very good. Moving on.
Great. Good morning, Mr. Chairman, members of the committee. Mika Malone with Makita Investment Group. Can you all hear me okay?
Perfect.
Great, thank you. So I'll begin my comments on page 11 of the same deck that Sam was referring to with just a quick snapshot. And I think Sam highlighted appropriately the performance, which was quite strong on a relative basis, of the WRS pension system over its various time periods. The tables on this page are designed to give you quite a bit of information in one set of charts. The top left is just a graphical representation of those same numbers. So when you're looking there, the blue bars are your total fund performance over each of the periods. And to the earlier question, all of these returns are annualized. And then we show the benchmark in green. So you can sort of see that, to Sam's point, the total fund has outperformed its benchmark over all trailing periods longer than 1 year. There's very slight underperformance in the most recent quarter. I don't generally view a single quarter as having a lot of useful information for anyone to take away, except to know kind of what's been driving the markets, which I think we're all well aware of. Risk assets performing extraordinarily well in the first quarter, with bond performance being relatively flat to somewhat down, given where yields were at during the period. On the right-hand side of page 11, we take a quick look in pie chart format of what the current allocation is relative to targets. And just a couple of quick notes here, because when we get to attribution, this will be useful. If you take a look at, for example, the right-hand side of both of those pie charts are sort of your equity and equity-like assets, so marketable equities and private equities in blue and green. And you see the target to those two asset categories are just over half of that pie chart on the top. And then where you sit today is a little bit under that. So you have had a little bit of an underweight to marketable equities. And when we get to the attribution, what you'll see is that exposure, which was a headwind in a period where equity assets have done very, very well, was offset by very strong underlying selection, which means that the managers that your staff have selected at WRS outperformed their respective benchmarks and added value above and beyond the hurdle of having to overcome being underweight the asset category. So I just wanted to sort of note that while we're on this slide. If we move forward, slide 12.
Hold up 1 second. Representative Larson has a question for you.
Thank you. So as I look at the market allocations and the current allocations, I see a pretty sharp adjustment in the marketable alternatives. Could you just explain to me what those would be?
Yeah, the marketable alternatives component of the portfolio is going to include hedge fund and absolute return assets.
Okay.
And so that's the general bucket being referred to there. And I will note that, as you might expect in a portfolio like that, there's going to be a variety of betas, what we consider market exposures. And one of the large betas in any marketable alternatives portfolio is often equity related risk. And there is some equity related risk in that portfolio. So that's another thing. And I was going to note it on attribution, but appreciate the question here. Some of that equity exposure helped your marketable alternatives portfolio add significant value. And so that offsets some of that underweight in the traditional long-only assets.
Thank you, Mr. Chairman.
Thank you. Please proceed from where you were.
Sure. I was just going to note, kind of in bypassing slide 12, that total assets I neglected to mention at the outset were at 11.2 billion at the end of March. So also having seen strong growth over the recent past in assets, predominantly driven by significant market performance. If we go to page 13, we begin a series of attribution charts, and we're showing you 1, 3, and 5 years for each of these. And I'll just make a very brief comment on each, and I'm certainly happy to answer any questions. But what you're looking at here, again, we're using blue and green. In this case, the blue bars are showing you the selection effect, which means value added within an asset category above and beyond its benchmark for that asset class. The green bars are telling you whether the exposure to that asset class helped or hurt your total fund performance relative to the benchmark, right? So are we overweight fixed income or equities, as I mentioned earlier, or underweight, and how does that affect it? The little pink bars are the interaction. These are things that are a little bit harder to explain because sometimes selection and allocation combine together to produce other effects. So I wouldn't spend too much time focusing on pink. And then the little orange circle is showing you what the total effect was. And so just really quickly on this one-year attribution chart, what I take away from this chart is that overall, the Wyoming retirement system outperformed its benchmark meaningfully by over 1%. And that was driven primarily by the selection effect that you see in the marketable alternatives bucket, which means that your hedge fund portfolio outperformed its respective benchmark and added value to the total return of the portfolio for that period. Overall, the green bars, the allocation effect, is on the negative side. So although that was more than offset by the selection effect, what you saw is that, again, exposure, slight underweights to marketable equities hurt overall performance. And that, based on looking at this set of charts, also your exposure to private real assets, which was overweight for the period, slightly hurt performance. And again, if you think about what drove performance over the last year, it's probably not surprising to think that what we would have loved to have in any portfolio is a lot of equity exposure. I'll move on to the 3-year chart. And again, the format is the same, and the story is mostly the same with one caveat. Over the 3-year period, both your selection within asset classes as well as your overall exposures to asset classes added value. So really, all of the effects were working in your favor for that 3-year period and adding value about 1.7% over that 3-year period above and beyond the benchmark, as Sam referenced earlier. So very strong positive outperformance. You can see, again, that's driven really in 2 key places in the portfolio. And to me, a 3-year statistic starts to be more relevant to take data points away and to say what's really working in this portfolio. And what I'd say is you see significant strength in your private equity portfolio. That's one of those asset classes where you expect selection to be the driving factor in exposures. It's actually been a pretty tough period for private equity relative to public equities. When we've seen public equities up some years 20, 30%, it's pretty tough for private assets to keep pace. In your case, they've kept pace and you've added value within that asset category as well. And then, as we discussed earlier, that marketable alternatives bucket has added meaningful value from a selection effect standpoint. So the last attribution chart that I'll show you is the 5-year on page 15. And again, I think the story looks broadly the same. You continue to have a little bit of a negative allocation effect from an underweight to public equities, but that is more than offset by meaningful allocation and selection effect contributions from private equity, marketable alternatives. And some of the reason that the bars in some of the other areas, by the way, are smaller is just because they're smaller components of your overall portfolio, not necessarily because they didn't have strong performance within their own asset category. So what I've really seen over the last 5 years is that overall, this portfolio is firing on all cylinders. You've seen strong performance out of each asset class relative to its benchmarks. I think that staff has discussed with their investment committee and board areas where they look to continue to improve portfolio performance over time. But I've been quite pleased with the outcomes over the last 5 years. We want to look at peer relative results really as just an additional data point. Sam already covered this, but I'll just note that on page 16, we always show the peer group kind of distributed by quartiles so that you can kind of see what that range of outcomes were in any period. What stands out to me is that the range of outcomes over the 1 year period was very, very wide. And that is because with equity markets up, significantly for the period, the exposure any fund had to equities was definitely a contributor. Private markets, returns, and exposure was another meaningful contributor. And so your portfolio did quite well in what I'd consider was a relatively difficult market for diversification. You would have rather just been in all large cap US equities and had a ton of exposure to NVIDIA. You had a lot of exposure to other things and still managed to produce top quartile performance in that marketplace. As you look at the longer trailing periods, you see the range of return outcomes compressed, but still very, very strong top decile and top quartile returns in each period. We don't want to think about returns absent thinking about risk. And so page 18 is a quick snapshot. And I know I heard from my peer at RVK discussing the Treasury portfolio, a similar analysis earlier. It's really important that we think about how each unit of return that the staff at Wyoming Retirement System is earning, what that looks like relative to the risk that's being taken. And so this table looks at all of the time periods in one handy chart, starting at 1 year on the top and moving all the way down through 10 years. And it's comparing the total fund to its strategic blended benchmark in each of these periods. I'll make just a couple of notes, which is to say that what I see as the main takeaway from this chart, one is a lot of positive numbers. So positive returns, positive information ratios, positive Sharpe ratios. I appreciate that Josh gave you already the formulas earlier for information ratio and Sharpe ratio so that I don't have to walk through that. But what we like to see is that with a positive Sharpe ratio, it means that for every unit of return you're earning, the risk that you're taking was worth it. And then on the information ratio side, relative to your benchmark, rather than looking at kind of a risk-free rate, relative to your benchmark, you're also adding meaningful value. And that information ratio is consistently positive and quite strong over these trailing periods. So overall, quite pleased with performance on both an absolute and a risk-adjusted basis. The remainder of this report really walks through the details at the asset class level, shows rolling Sharpe ratios to show you that we don't just look at a single point in time. We want to look at how those things shift over time. And then finally, at the end, we show the benchmark history through time for the portfolio for your reference. But I think that what I'll do is pause here and answer any additional questions that you all may have about performance.
Questions? You did such an outstanding job. There's no questions, it appears.
It's great. I think being a half an hour past our time probably helps with that as well.
No, you did excellent. Thank you for the update. Certainly appreciate it. Sam or Director Swindell, anything you'd like to add in conclusion?
Just to conclude with my appreciation for the support of the legislature of our operations. I think it's there's a 2007 Management Council audit of the system that made mention that maybe it was time in 2007 to consider hiring a chief investment officer and having a professional investment staff. When they wrote that report in 2007, they didn't know that they were only 1 year away from the great financial crisis, one of the greatest crises in the capital markets since the Great Depression. This fund went down 30%. The median fund only went down 26%. 4% delta, $400 million, further down. Now you got to recover that. So we went down harder than other funds, and we didn't recover as quickly. 2011 was a rough year in the investment markets. Average fund was only up 1.5%. We were down 1.5%, another 3% delta. And all that stuff compounds. You can see what a difference has been made by hiring a professional investment staff and supporting their operations. When you're up 115 basis points over the benchmark over 7 years, call it 1%. 1% is $100 million. 7 years of that, $700 million, and all that compound, that's $1 billion. It's huge. And that's what makes the system tick, and that's what allows us to put almost $1 billion back into the economy, most of which stays here in Wyoming. So appreciate your support.
Well done. Keep up the good work. Senator Hicks.
Yeah, just a real quick question on the 457B program and the limited range of alternatives that, and so the first question, how much is currently invested in that program? Do we know?
We were just under $1 billion at December 31st, but now we're back above it. So I think it's like 1.1 billion in the 457 account, and that's separate from the 11 billion that we've analyzed.
So the question I have is, why can't we take an option? Because you go through those programs and you look at what you can and you choose, there's index funds in there, but they're all outside private firms index funds. So 2030, 2035, 2040, all of those. Why couldn't we do that with just what we do with WRS? That I would take, people could just take a percentage of that, put it right in there, and then that is managed exactly like the rest of the portfolio. Is that an option?
Mr. Chairman, Senator Hicks, yes, it's an option. I don't think it's a particularly attractive option, but you could. You could put $11 billion into a long-term index fund, give you in this case, our pooled risk in the pension fund doesn't morph. In other words, the pension fund doesn't get older, unlike you and I. So on an individual basis, with a target date fund, it adjusts the risk exposure from a lot of stocks early in life to less stocks, more bonds later in life. And you probably wouldn't do that. You would kind of fix that exposure. But that's available too in the market at roughly the same rates.
Yeah, Mr. Chairman, that's not the question I was trying to get to, is rather than in that 457, I have those options already. What I'm saying is there an option I could just say, take my percentage or whatever mine is and just put it in with an existing WRS investment portfolio asset allocation?
Oh, you want to invest in the pension fund?
Correct.
Okay, I got it. Sorry, I misinterpreted the question.
Is the asset allocation?
The answer is yes, it's possible. Idaho does that. In fact, I still have an account with Idaho's 457 plan, and it's invested in the pension systems base fund because they annuitize it and they strike a daily rate with it. The challenge is striking that daily rate. It does impact how you can construct the portfolio, particularly with private markets, and I'll let Sam explain a little bit more of the challenges of doing that, because if you were to do that, then we've got to have a per share price on a daily basis, just like you do on Wall Street. Sam?
Yeah, Mr. Chairman, Senator Hicks. Yeah, that's exactly right. It's great in theory, but a lot of it comes down to the accounting. So if we're only getting valuations on private investments once a quarter, there's stale values in between. And so any participants who picked the WRS option wouldn't be able to sell in the interim. So we wouldn't be able to have that daily liquidity, or else they'd be selling based on stale prices.
Very good. Thank you. Thanks for the hard work the WRS does. We certainly appreciate it, and the retirees appreciate it even more. So keep up the good work. Moving on to our next item, item number 4, benchmark performance compensation RFP update. Polly or Brian? I believe this will probably be a pretty short update, but.
Thank you, Mr. Chairman. Hello, committee. Regarding the update on the RFP that was pursuant to Section 320 of the 2024 budget bill, the JAC co-chairman, Nicholas Ankinski, as well as Chairman Walters and Vice Chairman Nethercott served as the selection and evaluation panel for that RFP. I should back up and say that LSO did issue an RFP for those services, and it was distributed widely. We had a distribution list of 14 vendors that would be capable of doing that work, as well as it was posted on A&I Procurement's public purchase website. And so it was available to the public for all vendors to see and to respond to. So the four co-chairmen served as the selection panel, as well as there was involvement with the governor's office staff. Betsy Anderson, Erica Legursky participated in review of the RFP before it was released, as well as received the RFP documents and participated in discussion with the four co-chairmen. So despite the widespread distribution of the RFP, there were 2 respondents to the RFP, and the respondents were the existing contractors with the state of Wyoming, specifically Makita, who provides the consulting to WRS, and RVK, who provides the consulting to the SLIB and the state treasurer's office. So the selection panel is still, by all accounts, the proposals were very, very good and, provided adequate information. The selection panel is still just working through getting their final information put together for the evaluation, and we anticipate that the selection panel will go to the Management Council with a recommendation and a request for their approval through email ballot next week.
Any questions on the RFP process or where it stands in the process? Okay, very good. Thanks, Polly. And that's the update on that. Any public comment on the RFP process for the benchmark and performance compensation update or for the investment performance report that we have heard over the last hour approximately? Any public comment? Okay, seeing none, we're at the second favorite part of the day, which is lunch. And so with that, lunch is scheduled until 1:30. If we could, committee, maybe try and be back about 1:20. We'd try and get a little bit earlier start if we can, but 1:20 we'll try and start, and we will get started with the State Treasurer's Office staffing and staffing levels and investment manager selection at 1:20. Thanks, committee.